All right, let me unmute this thing. Good morning, Jose. Nice to see you. Good morning, everybody. Welcome to the education room. It's good to have you here. Hey, good morning, Alex. Nice to see you. Guys, I hope everyone's doing well today. Jeff, nice to have you in the room. Hope everybody's excited, ready to learn, right? Um, I am going to start the day by saying let yourself be new, guys. Let yourself be a student. Put yourself in a position where you are looking to learn rather than looking to show what you already know, if that makes sense. Don't worry about catching everything. Don't worry about looking for everything. Don't worry about every trade. Don't worry about what the guy next to you is doing, the other person in class is doing, guys. Focus on your journey. Focus on your success. That's what we're going to do today. We're going to talk a lot about personalization. Maybe not a lot, but we're going to talk a little bit about it. That your plan needs to be your plan, right? And that your plan needs to be a plan that's been proven to win more than it loses. Your plan should have advantages. That's what we're going to talk about today, guys. Same thing we talk about every day. We're going to talk about advantages. We're going to talk about recognizing advantages. And then turning those advantages into a trading plan, if that makes sense. Not having a trading plan that says, hey, I'm going to get rich. Having a trading plan that says, hey, this is the trade that's been proven to win more than it loses. This is the trade that I'm going to focus on. This is the trade that I'm going to use to achieve my financial goals. So we're going to do that today. But just like every day, guys, before we get into that, let's check news and make sure there's nothing going on. Today is, what is today? Today's Wednesday. We made it. They did the trade balance at 8:30. Didn't have any effect on the news at all, really, or on the markets. It was low impact. If you are a crude oil trader, crude oil inventories comes out at 10:30 a.m. It can create a situation where the market spikes, jumps, moves fast, changes direction on a dime. Guys, that's all news is. News isn't taking a release and making a decision on it. What news is just understanding that the market may react a little violently when it's released. There's probably somebody sitting in the shadows waiting to hear what the crude oil inventories are, and he's either going to buy a bunch or dump a bunch. Either way, the market has the potential to spike. So guys, every morning I go through that. I take a look. That is part of my morning routine. When my charts are loading, I'm checking news, guys. And then everything that I talk about, once you get into the trading, once you get to where it's time to look for advantages, everything that I talk about comes from the education page, guys. There are no secrets with Nexgen. We work very hard to give you anything and everything that you need to be successful. We're going to lay it out in front of you. I'm going to lay it out in front of you, guys. I'm going to give you the looks. I'm going to give you the rules. I'm going to give you the platform for feedback 15 hours every week. And it's going to be up to you to take advantage of those tools to follow the path. I can tell you in my own experience, the people that stick to the path tend to do really well. The people that are a little stubborn, like myself, at times, stray from the path, decide to chase everything rather than the best of the best. Those are the people that tend to take a little bit longer getting to where they want to be. So we're going to focus first and foremost on a high probability trend trade, guys. We're going to talk about a trade that is defined as when each indicator on every chart agrees with the rules for the trade. And typically, this is when the triggers are their strongest. This is when no termination conditions exist. And this is when there's no trouble spots between your entry and your target. Guys, this is a trade, this high probability trend trade, is a trade that you're going to look for after a market reversal coming from Fibonacci, after a termination condition that creates a full reversal. And there's a section here that says your first 30 days and beyond. I want your focus for your first 30 days, and I want you to define your first 30 days as you're either literally in your first 30 days with Nexgen, or you're in your first 30 days of recalibrating your brain, of focusing on the best of the best, trying to omit all of the trades that have been taking your money, that have been killing your results, that have been fighting, all those things. Let this be the start of your first 30 days, guys. Focusing on that highest probability trend trade, that trend trade that comes from a termination condition on your large chart, from a reversal of the market at Fibonacci. Guys, because that's a trade that typically wins 70 to 80% of the time. That's a trade where everything lines up. There's nothing in the way. There's no problems. And it's going to put you on the path to success. It's going to give you a trading plan that wins more than it loses over the course of a sample. And really, it's going to take the stress out of trading. It's going to take the opinion out of trading. It's going to take the emotion out of trading. I hope I'm selling this one well enough, because most of us want emotionless trading. Most of us want a plan that wins more than it loses. And then at the end of the day, we're all here to make money, right? Give yourself 30 days on the high probability trend trade. Just harness yourself. Find something to do on the side. Have a little handheld video game. Get a sketch pad. Read a book. Doesn't matter. But if your rules aren't met for that high probability trend trade, give it 30 days. Simply don't trade, right? Study the market. Scroll back. Take pictures. And when you're successful with a very simple plan, when you're making money with a plan that has been proven to win more than it loses, when you are in that 60, 70, 80% win percentage, and you want to expand a little bit because maybe you want to be busy, guys, that's when you're going to find yourself into these medium probability trades. But before you get there, your focus on the high probability trend trade, guys, is going to teach you probably the most important skill that you can have as a trader. And it's going to teach you to read your charts. I almost omitted that part. I'm putting a lot in the room here, guys, but chart reading is what we do. We're chart readers. 90% of your day is going to be reading indicators. 90% of your day is going to be waiting for advantages. 90% of your day is waiting for your rules to be met so that you can enter the market. And guys, that 10% is going to be taking the trades because the advantages are present, not because you're bored or you hope or you want, but because the market is telling you, your indicators are telling you that it's time to enter a trade. And when you are taking this high probability trend trade, when you're learning to read your charts, you're going to walk away with a skill set that nobody can take from you, guys. You're going to understand where the market is likely to continue. You're going to use that continuation point for entries for that highest probability trend trade. You're going to understand where the market is likely to go. And where it's likely to go is a great profit target. You'll use Fibonacci. You'll use these trigger lines and momentum to determine intelligent target points. And then most importantly, you're going to understand where the market is likely to stop, guys, or where it may reverse. And once again, you're going to use Fibonacci and you're going to use trigger lines. And you're going to understand when that trend may be ending. And even more importantly, you're going to be able to take these likely to stop points, these termination conditions, and use them as an anchor for that highest probability trend trade, for that high probability trend trade that happens after a termination condition on your large chart. So when you are proficient, right, give it 20, 30 days, 20 trading days, 20 days in the market. That high probability trend trade is going to branch out and enter that medium probability trade scenario, guys. And this is when most of your indicators line up for a trade. However, a small issue exists. Your ability to read the charts that you are going to grow in that first 30 days is going to have you identifying that small issue. This will be the vast majority of your trades, honestly. When executing medium probability trades, you're going to take them, but you have to manage them assertively. Your ability to read your charts is going to allow you to manage these trades assertively. If there's trouble in your way, once again, your chart reading is going to identify that trouble. You may take a portion of your position off at that area, reduce your risk to a zero loss level. Medium probability trades don't fall into that 70 to 80% win category, but your ability to read your charts, even if they're not successful, the losses tend to be minimal. And the potential for profit is there, even if it's not a home run hit, guys. So that's what we're going to focus on today. We're going to talk about high probability trend trades. We're going to focus a little bit on medium probability trend trades. But ultimately what we're going to do is we're going to create an opportunity for you to build a plan that's capable of winning. To build a plan that has been proven over and over. And it starts with only 3 rules, guys. 3 rules, and each rule provides an advantage. And when you couple, or actually when you, I guess, put those together, it's not a couple, it's 3. When you put these 3 advantages together, it results in a trade. There's your 10%. Your large chart must have strong trigger lines. And when it does, you have the advantage of momentum. Your large chart must have no termination conditions, nothing in the way, no areas where the market is likely to stop. When that rule is true, you have the advantage of a clear path. And then we're going to use a small chart for entry. And you're going to be able to refine with such precision where that market is likely to continue, that's where you're going to enter, guys. And when you put these 3 advantages together, that's the recipe for a trade. It is simple. It's easy to recognize. It's easy to practice. And it happens on only 2 charts. Your large chart behaves as a broad stroke of a brush. Your large chart is going to determine direction. And direction is just another way of saying the trend, right? So how do you know which way the market is moving? How do you know which way your brain should be focused? Guys, if the background on your large chart is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. Guys, trading with the trend, honestly, is the first advantage that you're going to be able to give yourself. If the background is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trades short. Guys, trading with the trend is a huge advantage. And I always encourage people, ask yourself, how many mistakes would it eliminate if you just committed to trading with the trend? Guys, I can tell you for me, it would probably take, well, it did take probably 10 losers a week out of my scenario by no longer forming opinions on what the market may do, but focusing on what the market is doing. So trading with the trend and trading with momentum. Momentum also happens on this large chart. It's the idea of strong trigger lines. Using these T3 trigger lines to give you the advantage of momentum. And then your areas are defined, whether or not you have a clear path to your target. All of this comes about on the large chart. It's that broad stroke, and it's showing the overall opinion of the market. Large crowd mentality. Everybody says it's going up. Everybody says it's going up fast. Everybody says that we have a clear path. Let's trade with everybody, right? There's no reason to buck the system. But when these rules are true, we're going to go to the small chart, and we're going to count on a couple yahoos to buck the system. And they're going to force a pullback, just a small little down in a world of up, or just a little bit of up when everything says down, guys. And you're going to be able to take advantage of this. You're going to be able to refine that broad stroke of a brush, pinpoint the area for entry. You're going to be able to reduce risk. You're going to be able to increase your profit potential, guys. And that's your rule number 3. Your third advantage of an entry area happens on this smaller chart. So let's keep it simple today. Even if you haven't been keeping it simple in the past, let's get back to and embrace the idea of 2 charts, 3 rules, 3 advantages, and when they're present, you're going to take a trade. When they're not present, you're going to sit on your hands and wait for them to be. And we're going to go back to the education page, and we're going to talk about these 3 advantages, guys. And everything starts with strong triggers. Every trade should begin with strong trigger lines. And strong trigger lines mean in an uptrend, your small triggers are crossed up, they're above the large triggers. The large triggers are wide, they're angled in the direction of the trend, guys. And this is a great trigger line lesson for you. If they're flat, there's no momentum. If they are wide in the direction of the trend, there is momentum. Guys, it relies on those wide trigger looks, those small triggers above the large, the space created between the two. When I have this look, this is what we call strong triggers. Strong triggers is synonymous with momentum. And when I have this best look, this rule number one met, the odds are favorable for the market to continue in the direction of the trend. You're going to hear odds favorable momentum in class all day long. Look at that momentum. It's odds favorable momentum. The smalls are above the large are wide. They're angled in the direction of the trend. Guys, this market is likely to continue up. In a downtrend, the smalls are below the large are wide. They're angled in the direction of the trend. The space created between the two trigger lines lets me know that the odds are favorable for the market to continue down. When we have this separation, we're in a momentum phase. And when we lose that separation, when the small triggers break back inside of the large, this is a weakening of the large triggers. And when we have a weakening of the large triggers, guys, anything can happen up or down. You lose that advantage of momentum. So as the trigger lines get closer and closer, momentum is waning. When they work themselves back inside, we've lost that advantage of momentum. And because you've given up the advantage of momentum, rule number one isn't met for a high probability trend trade. And it becomes a situation where you sit on your hands and you wait for that best of the best. And what you're going to find is that odds favorable momentum doesn't happen all day, every day, guys. You're going to have a mix of odds favorable and anything can happen. Notice that here with anything can happen triggers, those weakened triggers, it's kind of a precursor for a reversal in the market. When we have that odds favorable momentum on the 13.2 on your large chart, you'll see these tails on the bars on the 13.2. Guys, these tails represent a pullback on that smaller, faster chart. These are potential entries for a high probability trend trade. And you can see with that odds favorable momentum, the market does in fact continue up until those triggers become weak again. And there's that reversal once again. Strong triggers, the market continues down. And then it works its way into kind of a transition phase. Nothing agrees. The background is green, but the triggers are red, right? The large triggers are green, but the small triggers are red. Guys, this is the market trying to figure out what it's doing. This is buyers and sellers fighting head to head. This typically happens right at Fibonacci areas. And there's no reason for the Nexgen user to try to predict where the market will go. If you simply wait for them to work it out amongst themselves, get that odds favorable momentum, guys, have that advantage. So rule number one gets everything going. Guys, if you're new with me, if you are committed, once again, like to simplicity, give me a why in the room. Let me know that you're comfortable, that the advantage of momentum, that the look, those smalls above the large, guys, that's the one. That's what gets everything going. And when you have that look, when you have that momentum, that advantage in place, guys, it's time to be sure that there's a clear path. This is rule number two. It's also going to happen on a large chart, guys. We're going to go to Fibonacci tops and bottoms. And a termination condition is nothing more than an area that may reverse the market, guys. It's a Fibonacci-based area that may reverse the market. These are the areas that we're looking for, guys. And this is also a great roadmap if you're brand new with me and you just like, man, I just want to know what I'm looking at. Areas that may reverse the market but are not guaranteed to, guys. Divergence high lines, these magenta lines. Hey, Philly Trader, that's a new name for me. Welcome to the classroom. Divergence lows, these magenta lines. What's a divergence? A divergence means that there was a loss of momentum in the market. Guys, you don't have to compare price or MACDs. You don't have to do anything other than recognize that when a pivot forms and this magenta line or this cyan line comes off a low or this magenta line comes off a high, guys, momentum wasn't following price. And we can use these to help determine turning points in the market. We're also going to use red Fibonacci resistance, blue Fibonacci support, or these yellow 1-to-1 dots. Guys, these are your areas. These are what we're going to look for potential reversals. And it's just a two-part process. Let me find my picture. Two-part process to recognize a termination condition. The first part is that price reaches the area, guys. And when I talk about price reaching the area, It means that these Renko bars in a downtrend come down and smack headfirst into support, right? They're coming down. Support is now reached. That Fibonacci area is now reached. Your job is to ask yourself, where are those T3 trigger lines? And if they remain above that area of support, guys, we've reached a termination condition. Rule number 2 isn't met. We have reached an area that may reverse the market. You can see in this particular picture, it creates an awfully big bounce. Guys, when price reaches an area and absolutely no trigger lines break through, you've reached a termination condition. It may reverse. There's absolutely no reason to take short trades into an area that may create a bounce. We're looking for the advantage of a clear path, right? So when is a path clear? Up here, price reaches this area of support. My trigger lines remain above. I don't have a clear path. When both the small triggers as well as the large triggers get to the other side of one of these Fibonacci areas, below support, above resistance, what you'll notice is when the trigger lines clear, support begins to act as resistance. Both sets of trigger lines are below the area. Guys, we now have a clear path. Here we also have odds favorable momentum. There's one of those tails, a potential entry to get us back down to that Fibonacci area of support. And you're going to see this throughout the day, guys, and you're going to have to learn to sit on your hands for a little bit. Price comes down and creates this pivot. This pivot has a loss of momentum, so divergence is formed. This in itself is not a termination condition. What this is just a pivot that's slowing the market down. But when price reaches the area, guys, it may reach it, it may exceed it. The thing that we're looking for is that upon impact, where are the trigger lines? If they all remain above, well, now we have a termination condition. So not a termination condition, just a divergence low. When price reaches, trigger lines remain above. There's that recipe again, guys. We now have a termination condition. When this termination condition creates a full reversal of the market, we have what we call a strong bottom, guys. This is your anchor. This is that setup for the best of the best, highest probability trend trade that we can take. So price reaches the area. If the trigger lines remain below, no more long trades, at least in the moment, right? If it breaks, if both the small and the large go above that area of resistance, it's broken. Now we have a clear path again. But in this case, price reaches, trigger lines remain below. I'm no longer looking for long trades. I'm not willing to forfeit that advantage of a clear path. Price pulls all the way back down to support. Once again, the trigger lines remain above. Guys, 90% of what you do during the day is going to be sitting on your hands and waiting for the advantages to be present. I'm not going long into resistance that may reverse the market. I'm not going short into support that may stop the market, may reverse the market. Price comes back up to resistance. Where are my trigger lines? They all remain below. It's a termination condition. There's that divergence high. Trigger lines remain below. And resistance, guys. A great accumulation. We have one of those pivot stop outs when price exceeds the divergence high and goes the other way. When it happens at Fibonacci, it's even more powerful. Guys, this termination condition creates a full reversal in the market, provides odds favorable momentum. This is your strong top. This is your anchor for that best of the best high probability trend trade. I like this next picture a lot because it reminds us that the rules are independent of one another, but they do complement one another. Here we have odds favorable momentum. That market's in a downtrend, the smaller outside of the large. Everything says that this market is likely to continue in the direction of the trend, and it does, right until it smacks into these one-to-ones, almost to the tick. You'll be amazed at how often Fibonacci holds to the tick, guys. These areas are powerful, and institutional traders are reacting to them. Price reaches one-to-ones. All of the trigger lines remain above. No more short trades. It keeps you safe. It keeps you out of that bounce. It lets you know that there's not a clear path, even if momentum is present. And guys, when this termination condition creates the full reversal, large triggers go from red to green, right? Green, large, and small get above this area of resistance. It begins to act as support. There's one of those tails. There's one of those potential entries on the 5-1. Guys, this is your highest probability trend trade. A 5-1 trend trade that happens after a termination condition on the 13-2. this is your best chance of success in the beginning, guys. This is a trade that typically wins 70 to 80% of the time. This should be your focus for at least the first 20 days to be able to recognize these entries and to take them without hesitation. One more termination condition, but before I go to it, is everybody comfortable, especially my new guys? Philly, you good with this one? Price reaches an area, if your trigger lines stay above, don't go short into the area, right? It's an area that may reverse the market. There's no reason to try to hope, to wonder, to pray, right? It's just there's no reason, guys. Sometimes the market turns from nowhere. Sometimes you get a clear path in a downtrend. Sometimes you have odds favorable momentum and a clear path in an uptrend. But the market seemingly turns from nowhere. There's one more termination condition that I want to talk about. And it's a termination condition that happens on every chart, guys. You're going to see it on range charts. You're going to see it on tick charts. You're going to see it on month charts, week charts. It doesn't matter. What it is it's three divergences in the same price range. 1, 2, 3 losses of momentum. That's all a divergence is a loss of momentum. When it happens 3 times in the same price range, it may terminate the trend. Awesome. Philly, if you're keeping up with me on day 1, you're doing amazing. I want to remind you, and this is not just for you, Philly, but anybody listening, if you have a question about what I'm talking about, if you need a little clarity, just raise your hand. I will stop the lesson and make sure that you keep up. It's important to me that you're getting this. It takes a couple days and then it really sinks in typically, but don't be afraid to interrupt the class, guys. This class is designed as a discussion, not a lecture. So 3 losses of momentum may terminate the trend. It becomes even more powerful, guys, when we take that trigger line lesson from rule number 1. If my triggers, even on the 5-1 chart, go from odds favorable to anything can happen, those smalls work their way inside of the large. Now I'm coupling loss of momentum visually with divergence with anything can happen triggers. It becomes even more powerful. More powerful still when that final pivot is higher than the previous. When that third pivot is higher than the previous from a low or lower than the previous from a high. Guys, this is letting me know that not only can price not match the previous push, but I'm also losing momentum as it falls short. You're going to see lows that look like this on your 5-1 chart. You're going to see highs that look like this on your 5-1 chart. And it's going to help you identify these turns on the 13-2, guys. That is the only termination condition that I will look for on the 5-1. 1 divergence on the 5-1 doesn't scare me. 2 doesn't scare me. 3 gets my guard up, lets me know that the market may be reversing. Guys, you'll see this on higher time frames as well. When you have 3 divergences in the same location on your large chart, it can usually cause a major reversal, right? Expecting bigger moves. So guys, these are your termination conditions. These are your clear paths, right? Rules 1 and 2 being met. Strong triggers, no terms. The advantage of momentum, the advantage of a clear path. You're now 2/3 of the way to having the recipe for a trade met. And now all you have to do is focus your attention on the smaller chart. Turn over to that 5-1 chart. And let's refine that area where the market is likely to continue. I'm going to type out rule number 3 in the room because I think that seeing it all together makes it easier to understand the concept, guys. And you're going to use a limit order, meaning that you're going to wait for the market to come to you. And you're going to buy or sell, depending on whether you're in an uptrend or a downtrend. You're going to buy or sell a pullback. And a pullback is a small retracement in price. If every indicator is going up, you're going to want that market to come down to your limit order to get you into the market. If everything is pushing down, you want that market to come up to you in order to get into the market. And you're going to buy or sell a pullback at an area. And an area can be Fibonacci support, it can be a mid-band, or it can be yellow one-to-ones. But the key is they need to be inside of favorable large triggers. So guys, I'm typing this out in the room, and if you say it in one breath, I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So let's define favorable large triggers first. Favorable large triggers are wide. They're in the direction of the trend. Both the large triggers, these smooth triggers on your 5-1 chart, and the synthetic triggers, these kind of stepped triggers on your 5-1 chart, should be overlapping. They should be one on top of the other. When they do this, your area where the market is likely to continue is smallest. Your window of opportunity becomes very concise, very easy to recognize. And when they do this, your risk is reduced dramatically. So insisting on favorable large triggers is going to provide an advantage as well. And we are going to use them, and we're going to look for areas that fall within them, and we're going to create a window of opportunity. When the rules are met on your large chart, this is the look on your 5-1. You should have strong triggers. Small's above the large. The large should be wide. They should be angled in the direction of the trend along with those synthetics overlapping. You're just going to identify those large triggers and the areas that may fall within them. Remember, blue Fibonacci support, green midband, yellow 1-to-1s when looking for a long trade. If you were looking for a short trade, it may be that magenta midband, red Fibonacci resistance, or still yellow 1-to-1s, and they need to be inside of favorable large triggers. But remember that we're going to buy a pullback in this uptrend, which means that the market has to go against the overall trend for just a little bit for us to get an entry. And we see the beginning of this pullback when a reversal bar forms, guys. This is the beginning. Everything says up, a reversal bar forms, you're going to create a window of opportunity. Some traders use drawing tools. Guys, using a drawing tool in the beginning is very advantageous. And you're going to create this window of opportunity, this area where the market is likely to continue. It will extend for long trades from your highest point of support to your lowest point of support inside of favorable large triggers. For a short trade, it will be your lowest point of resistance to your highest point of resistance inside of favorable large triggers. Guys, when this reversal bar prints, when your window is identified, you're simply going to right-click on your chart and you're going to activate a limit order and you're going to sit on your hands and wait for the market to come to you. And if it does, you're in a long position. Notice that price pulls back all the way to that area of support inside of favorable large triggers. See this little fluctuation, guys. Remember that you're looking at a smaller, faster chart, a refinement chart. You're going to see these fluctuations. Don't let them distract you from the rules. Your entry comes just above that midband at the top of the window of opportunity. And it happens here. Why? Because you have the advantage of momentum, right? Let me find that picture. The recipe is complete. You have momentum, you have a clear path, and now you have an entry. You enter the market at the top of the window, understanding fully that it may go to the bottom of the window, right? And it may go beyond the window, but if it does, you no longer want to be in that trade. Rule number 3 is no longer true. So your protective stop will go below that window of opportunity, below those 1-to-1s, below that large trigger. Guys, your risk is typically going to be between 9 and 13 ticks on a futures trade on the S&P on crude oil. You can set an ATM strategy, maybe 12 ticks, gives you time to react and get that stop where the market shouldn't go. Guys, this is a trade that I take 1,000 out of 1,000 times. My plan says to never miss this trade. My plan says that when this sets up, I'm in that trade because of the advantage of momentum, because of the clear path, because I waited for the pullback to the area inside of favorable large triggers. Not to the large triggers, to the areas inside of favorable large triggers. And I really feel that the language is important there. Don't need that snag it notification. All right, guys, why do we wait for the area? Because this is where it may bounce. These areas inside of favorable large triggers create like a wall. You're throwing a tennis ball up against that wall. Guys, from your highest point of the trigger lines to your lowest point of the trigger lines, that's a pretty big area. The closer the trigger lines are, one on top of the other, the smaller that area becomes. But your window of opportunity is only from that highest point of support to your lowest point of support. Your initial stop goes outside of that window of opportunity. Where's my stop sticker? There it is. But once that market moves in the direction of your trade, guys, you're going to reduce risk below the reversal bar. It's already doing what we anticipated it to do. We're going to reduce risk. Because you wait for the market to come back to these areas, your risk is reduced dramatically. Because of that pullback to the areas, your profit potential is increased dramatically. And guys, this is a trade that typically wins 70 to 80% of the time. This is your highest probability trend trade. This is taking those three advantages. And once they're present, taking advantage by defining that window of opportunity. The path is clear, right? You're going to wait for momentum. You're going to wait for a clear path. You're going to wait for an area inside of favorable large triggers. When you put the two charts together, guys, this is your window of opportunity. And notice that on the 13-2 chart, you have odds favorable momentum. You have not reached Fibonacci resistance. You haven't reached the one-to-ones. You haven't reached that divergence high. I'm going to take a picture of a picture real quick and remind you that this chart defines momentum. That was bad spelling. That was too. There we go. Defines momentum. It defines direction. And it defines areas, right? Your smaller, faster chart is nothing more than an entry chart, refining that broad stroke of a brush. So guys, on your 5-1 chart, you may see a divergence. It's okay. It's only one divergence. That loss of momentum is probably what's going to push you back to your best entry. You may see your small trigger lines turn against you. That's okay. It's a smaller, faster chart. In order for this pushback to get to the areas inside of favorable large triggers, there may need to be a little waning in the momentum. What's key on the 5-1 chart, guys, is that you have these strong triggers, the small outside of the large, that your area for entry, that window of opportunity, is as concise as possible. Some of you will say, but I'm so close to a termination condition, right? Guys, until price reaches an area, this is a target, because remember, we're buying a pullback. The market has to come back almost 20 ticks, and then it has room to get to that key Fibonacci area. Give me a Y in the room, especially new users. I know that we're going through this kind of quick. Is everybody comfortable? We're going to gauge the advantages on the 13-2. We're going to look for momentum and a clear path. And then, guys, your job is to just have the courage and the trust to buy the market as it comes down to those areas inside of favorable large triggers. Why do we get in at the top? Why do the rules say put a limit order at the top of the window? Guys, because of all that momentum, because of the clear path, I'm not anticipating these small group to be able to push too terribly deep. I've got a lot of pictures of that window of opportunity, guys. I love to share them in the classroom. From the highest point of support to the lowest point of support, right? This kind of maps out the whole process. The reversal bar produces, there's that pullback. From your highest point of support to the lowest point of support, guys, this becomes your window of opportunity. Your limit order is at the top. Notice that Fibonacci support is outside of the large triggers, guys. This is not a part of your window of opportunity. It's the areas that are inside of favorable large triggers. From shorts, same thing. Reversal bar, from the top of the triggers to the bottom of the triggers, from the lowest point of resistance to the highest point of resistance. Guys, sometimes it's only one line. It makes it real easy to know where to put that limit order. This one goes down and ultimately goes back up, but this great entry creates a manageable trade. Reversal bar prints from the top of the triggers to the bottom of the triggers. Notice that we have both yellow one-to-ones and a mid-band inside. Guys, you've created a window of opportunity. That's the point where the market is likely to continue. You will be absolutely floored at how many times this happens throughout the day. It's up to you to build a little trust, to be able to recognize it, and to have that limit order waiting for impact right there at the areas inside. This blue Fibonacci support is outside of the large triggers. It is not considered part of the window. If you try to save money by going lower, very often you're going to miss a trade. And guys, this is something that is testable. This is something that you can go through and study historically, and I'm going to show you exactly how to do that. And of course, the S&P is going to play nice. When I have strong trigger lines, right? When I haven't reached resistance, there's one of those potential entries. Guys, look where this circle lines up. Right to the area of support inside of favorable large triggers. Give me a Y in the room if you see it. Guys, this is the S&P live right now, moving real time in front of you. And this is a pretty outstanding trade. Trigger lines are up, the smalls have broken, but the large have not. We call this a 50-50 trade, guys. Remember I said that you're going to work your way into a medium probability trade? Hey, good morning, Safia. What's a medium probability trade? It means that your large triggers haven't made it through the area, but your small have. This is a 50-50 trade, and that's not a reflection of your chances of winning. It is just an indication. 50% of my trigger lines are through, 50% are not. Guys, when I have odds favorable momentum and a 50-50 look, areas have the potential to break. Strong triggers break things, guys. Have you ever watched the old cartoons where Superman flies through 50 walls at a time? And because he's so strong and because he's moving so fast, those walls just disintegrate on impact. That was the analogy that hit my head the other day, guys. This is an area with the potential to break because of the odds favorable momentum. When I have a 50-50 look, the area is not broken, which means it's not a clear path. Rule 2 not met, so this becomes a medium probability trade. Remember I said you're going to work your way into these medium probability trades. When an area has the potential to break but hasn't broken, guys, it's imperative that you insist on the best of the best entry on your 5-1. That best entry, and this one was perfect, starts with no divergence, right? No losses of momentum. I've already given up the advantage of a clear path. I'm not going to forfeit momentum, and I'm not going to forfeit an entry area. I should have no divergence. I should have odds favorable momentum triggers, guys. Small should be outside of the large. Strong triggers break things. And then for me, one of the most important things, guys, if it's medium probability, how about a tight little concise window of opportunity, right? Something very consolidated so that my risk is minimal, so that my profit potential is maximum. Guys, this is your first medium probability trade. And this picture that happened in the ES, 20 minutes ago? Guys, this is textbook. Hopefully some of you took it, right? You're going to write a set of rules that says, if I have a 50-50, these are the conditions that I expect. And then you're going to commit. You're either going to keep them or not. Guys, do you notice how I wrote exactly what I have? I talked about the conditions. I pinpointed the entry. This is what I need you to do on every picture. Annotate your chart. Tell me why you took it. Tell me what the problems were. Tell me what the advantages were. Tell me how you felt. And then share that picture, guys. Hit screencast. If you're on TechSmith Capture, it's a blue button, but it's going to provide a link, just like Ron put in the room. Your job is to post this picture into the room. Guys, there it is via screencast link. You can also right-click and hit copy. Whoops, that was the wrong one, wasn't it? Accidentally just put my typing in there. That'll happen on Snagit. There we go. I'm going to put it in. Just copy the picture, put it in. But guys, if your goal is $250 a day per contract, if you entered this market at 92, you didn't have Fibonacci resistance until 98, guys. That's 6 points. That's $300 worth of movement on only one contract, right? $300. If you're taking a 2 lot, you probably made 400 on the trade. Guys, do that every day. One trade, best of the best, everything in there. That's a $2,000 week, guys. That's an $8,000 month. That's a $96,000 year. The average person doesn't make $90,000 a year, especially in 3 minutes on the S&P with nothing but advantages. So guys, is everybody okay? Do you feel comfortable? Maybe not yet, right? But keep it focused. I'm going to give you a checklist right now, and this checklist is going to keep you focused on the absolute best of the best, guys. This is your trend trade checklist. This is your accountability. These are the rules that you should be writing on the chart. This is what you're looking for. Is the market coming from a good top or bottom? Guys, there's an entire video on tops and bottoms to help you understand them. If it is, it's great. If it's not, you can still do it. You may have to manage it. Oh, Philly, you'll get there. I haven't quit on anybody yet, and I'll tell you what, if you follow the path, you're going to get there a lot quicker than you anticipated. Did you have momentum? Did you have no termination conditions? Did you have an area inside? Guys, if you can check yes on each and every one of these, you have a trade that typically wins 70 to 80% of the time. You have in your first couple weeks a plan capable of winning more than it loses, right? Some of us are a little more visual. So I created this checklist, the exact same items, but I stole pictures from the resource material, guys. Now you can put this one, have it on your computer, study it each morning before you go in. Make sure that you're comfortable with what you're looking for. Guys, this is your plan. Your plan is to take a trade that's been proven to win more than it loses. Guys, there is a very simple path to getting to where you want to be. The people that follow this path find success and they find it quickly. The people that stray from this path typically struggle a little bit, don't always find themselves winning as much as they were hoping. They don't find themselves taking these high probability trend trades. And there's typically a little frustration that goes with that, guys. So I am asking, follow the path, stay the course. Post your trades in class. Every time you take something, win, lose, or draw, post a trade in class. Annotate that chart. Tell me why you did what you did. Point out the advantages, right? Take them straight from the checklist. Mark, I had odds favorable momentum, and I had no termination conditions, and I had an area for entry inside of favorable large triggers. Use that language because that language reinforces your ability to follow rules. And I'm going to hold you accountable for the rules that you give me. Guys, if you come in and you take trades and you don't know why you took a trade, it's hard to repeat it, right? But if you know what you did right, what you did wrong, that's what I'm here for. We're going to talk about it, we're going to discuss it, and we're going to talk about ways to fix the things that are a little bit broken so that you can do them better each and every time. Post your trades in class, guys. Don't be afraid, don't be shy. Nobody knows who you are. It's anonymity, right? Nobody knows if Philly, we don't know if you're a 6'5" truck driver or a 4'2" heart surgeon. Doesn't matter. We're never going to bump into you in the Quickie Mart and go, dude, I can't believe you posted that trade. Post everything. And then track your trades in the spreadsheet, guys. Nexgen provides you the spreadsheet. When you download the software, you get a copy of this spreadsheet. And this spreadsheet has two sections. The first section is your trade journal, guys. Even the CME suggests, hey, have a trade journal. Make sure that you're keeping track of your progress. Make sure that you're looking at what you're doing. Every trade I take, I'm going to put in here. What type of trade was it? When did I take it? And I love this one. How did I feel? Guys, the way you feel going into a trade is a very definite reflection of your ability to follow the rules. If you were nervous, if you were anxious, you might have been breaking rules, right? If you were confident, if you were relaxed, you identified those advantages, you've embraced them, and you're like, I've got everything on my side, let's go. Was it a trend trade? Did you have a good top or bottom? What did your triggers look like? How did your targets work out, right? And guys, this is the most important part right here, the notes. You either followed your rules or you broke your rules, right? And there's going to be a very definite correlation between following and breaking. You're going to use this as you simulate, as you practice. Each and every day you're going to go through. You're going to recognize patterns in the market that are making you successful. Even more importantly, you're going to recognize patterns in yourself. And you're going to do this with a little bit of study each and every morning, guys. What worked yesterday? What didn't work? What felt easy? What kept you relaxed? What felt forced? What made you nervous? Guys, a brief historical study each morning prepares you for the day. It will accelerate your learning trade. I do this every morning. Every morning I go through the pictures that we talk about in class. True story. Every morning I look at the pictures of the trades that I took yesterday. And guys, yesterday I lost 2 trades. And do you know why I lost them? And it was silly. I formed an opinion. I fought the trend twice yesterday, and twice I got separated from my money. I turned a phenomenal day into an average day. But I looked at it, and I've got a big note on a piece of paper in front of me that says, hey, silly, don't fight the trend. It doesn't work out great for you. So I'm doing this every morning. I'm looking at this. I'm studying. This is my first page. My second page, and guys, you guys helped me build this. This is my favorite looks. These are the looks of my perfect entries. These are those, the friend is your trend and the trend is your friend. Absolutely. Guys, these are the pictures of my personal trade setups. These are the looks when the rules are met, when the advantages are present. I've got over 200 pictures of those great entries. Guys, I'll give you my spreadsheet. I've done a lot of the hard work for you. You can study these, and I'll tell you, after 212 pictures of rules-based entries, you're going to get pretty comfortable with the idea. So post in class, use the spreadsheet. Where did my pictures go? There it is. This morning, we're going to learn the trigger and Fibonacci rules for when it's okay to trade. Guys, we just did that, right? Yeah, Philly, steal mine. And here's the cool thing is I'm going to steal y'all's trades when you post them in the room and fill up my spreadsheet too. Your job as a brand new user, your job as somebody looking for consistency, your job as somebody that isn't currently winning more than they're losing is to learn the trigger line and Fibonacci rules when it's okay to trade. Guys, my job is to teach it. I will give you examples. I'll show you pictures. I'll talk about the advantages. If you don't understand it, it's imperative that you raise your hand. This is your classroom, guys. This is your education. Hopefully, this is your future. This is your income. You also need to simulate your trades daily, guys. Post your pictures in the class until you're sure you have the correct rules. Because the correct rules have been proven to win more than they lose. Doesn't it make sense? In an endeavor where the sole goal is to make money, that you have a statistical advantage each and every time you take a trade, guys. Don't practice the wrong rules. Don't be a simulator millionaire and feel good about it. You're not going to invite simulator women over to your simulator mansion to show them your simulator Ferrari, or vice versa if you happen to be a lady, right? Practice the right trades. Simplify. It even says it on the path, guys. Simplify. I saw that, Ron. What looks will you commit to? Guys, you've got to learn the looks so they're easy. There's 200 of them. And I can tell you from the bottom of my heart, these looks are easy. I can recognize this look in about 2 seconds and activate my limit order because I've done the study. After class, before the next day, download replay data, guys. Go back and retrade the day. Fix your mistakes. Take the trades that you missed or skipped. Skip the trades that you shouldn't have taken. Guys, market replay is the ability for you to replay the day, and you're not doing it to see how much money you can make. You can use market replay to literally hit pause before you enter the market. And then when you hit pause, you're looking at your trade checklist. You're saying, do I have all of these advantages present? And if they are, you're going to take that trade and you're going to hit play. And guys, it's going to allow you to see the potential when you follow a proven plan. And if you go through that process and you see that potential, guys, you're going to be with me for the rest of your life. Go back and retrade it. Take pictures of the correct trades and bring those pictures to class. I want to see all of your replay because there may be a question, guys. And repeat this process every day until you're always taking the correct trades. Not until you're always winning or not until you mostly take the guys always take the correct trades, because the correct trades, that path has been proven to win more than it loses, right? And if I'm always taking the correct trades, and those correct trades have been proven to win 70 to 80% of the time, over the course of a month or two, and I take 100 trades, guys, I should be in the black. I should be considerably in the black. Even with my 30% losses, right? I should be in the black. And then once you guarantee yourself you can win, guys, that's where you go to live money. That's where you go to one of those prop firms. Take a picture, David. Tell me what you see. And guys, this is great. I will talk about everything, but if you're not sure, take a picture and tell me what you see, and then I'll look at your picture. I'll tell you what I see, and maybe we'll have an aha moment together, guys. Don't be afraid to put yourself out there. It helps. Are there any questions about the path? Are there any questions about advantages? Guys, you had one right here. Beautiful. And then price reached resistance without a trigger line going through. And you probably skipped this one because there wasn't a clear path, but it went up anyway, right? Play money Ferrari. I like it. And guys, we have weak triggers and multiple divergences and no areas inside of favorable large triggers. 90% of what we do is just reading indicators, right? David, are you annotating that chart for me? Let's look, guys. And David, I'm going to save my picture until we get your picture too, because I think that it's cool if you do it on your own. And then we compare, because most of you are better at this than you think. Most of you see things with a little more clarity than you expect yourself to. But we can start with this. I don't have odds favorable momentum, which means that I don't have rule number one, which means technically I'm not really looking for a trade right now. How easy was that? That's my first look, David. We'll see what else you see. Guys, this is the first hour. For those of you that are brand new, we got a pretty full room today. I do this first hour every day. Every day we talk about rules, we talk about advantages, we talk about entries. Every day we say the same darn thing over and over, guys, and you're creating this trust through repetition, right? You're creating this recognition through repetition. The next 2 hours revolve around your participation, guys. We're going to look at your charts. We're going to see what you said, what you see, what you're thinking. We're going to look at the advantages that you chose to embrace. We're going to identify the advantages that you chose to disregard. I don't tell you how to trade. That's not my job. My job is to help you read indicators so that you can formulate a plan that gives you the best chance of success. And guys, you know I love to share things. I wrote this out. Guys, this is like 99% my personal trading plan. And I want you to notice it takes 1 page. That's it. Simplicity. And what's the first thing? Never fight direction or triggers, ever. Guys, I've got it in bold. Why? Because I identified a pattern in myself. I love to fight triggers, but I've had to teach myself not to. Here's my checklist. Do I have a strong top or bottom? Odds favorable, no terminations. Was there an area inside a favorable large chart? Triggers. And guys, what's it look like? I put a picture in my plan. Look at this, odds favorable, no termination. Look at that entry. Absolutely beautiful and effortless, right? Guys, this is what I want it to look like every time I take a trade. Here's my management. Very mechanical, methodical. My entries are as mechanical as my management in the beginning, guys. We're eating an elephant together. Your first bite is entries, 20 days focusing on nothing but entries. Your second bite is management, being able to take those great entries and turn them into a profitable trade. Guys, this is your first 20 days. And then when you break off into that 50-50, that one medium probability trade, just so you don't get bored during the day, once again, there's a checklist with conditions and a management plan to go with it. Guys, I put that in the room. Write your own version. Put your own pictures in it. Let me know what it is that you're looking for, and I'll hold you accountable. I like it. So David S., you see not a good bottom, right? Not a termination condition that creates a full reversal. You know that that adds power to any trade that you take. So I love that you identified that. What do we have up here? We do have a termination condition at the top, right? Jerry, you've added that you like them outside. Momentum phase, right? I like it. And that's a little more advanced. In the beginning, we'll just work with odds favorable. So we had a divergence high, David. Price reached it. It exceeded it just a little bit, but notice how the large triggers don't break through. That area never breaks. Fibonacci resistance broke, but that divergence high didn't. Then we got a second divergence. We have one of those pivot stop outs, and the market pushes all the way back to a mid-band. So David, I'm going to compound a little bit on what you see, and we'll annotate my chart. I had Fibonacci support that you didn't have. I don't think you're running your synthetics. Maybe you are. I had a 21, and I rebuilt all mine this morning. But that's okay. We'll talk about the top. We do have a divergence. We did have a pivot stop out, right? And the small triggers in the trend now say down. Guys, when price exceeds a Fibonacci area, and it starts to push back, that mid-band becomes the first target. So let's do that. That's my first target. And then David, the one part that I want to add on to this is what we have happening. This is your reversal bar marker. Let's clean this up. Are you familiar, guys? Is everybody comfortable with the reversal bar marker? That white line on your chart that shows you where this bar will become an up bar. Is everybody comfortable with that? It's just a white line. If price reaches that white line, we have a bar to the upside. It's called a reversal bar marker. And it just gives you an indication of where that up bar will be formed. Guys, if your large triggers are above that reversal bar marker, when price accelerates away from those large triggers and comes in contact with something, a mid-band, Fibonacci support, Fibonacci resistance, and that large triggers are above, there's room for a full bar. This is what we call the gap theory. Price may snap back to large triggers that are a full bar away. Let's see, that space between the bottom of the bar and the large triggers acts like a vacuum. Shorts in that vacuum typically get run over. So David S., I like that you recognize the bad bottom. You recognize the pivot stop out. The one thing that we could add to that read is that gap theory. When price accelerates away from the large triggers, fast and aggressive, and comes in contact with a Fibonacci area, it may snap back and close that gap. Which means that in the moment, we're just not looking for a short, right? And they kind of seized up a little bit. Crude inventories are coming. Safia on 7 or 8. All right, and here's my confession, guys. I'm not a tech guy. I'm not a tech. Safia, I'm not sure. If you ask Jason, or maybe just bounce over to the traders chat, someone could probably help you out. So what's a fib line mean? Let's talk about that. Philly, you've heard the old adage, buy low, sell high, right? Fibonacci can help you determine where high may be. Fibonacci can help you determine where low may be. So let's talk a little bit. And guys, I love having this conversation because I think that this software is amazing. I really do. Philly, when you open up your software, so one thing that traders have done forever is use Fibonacci. And they used to wake up 5 hours before the market and they would do these projections, right? They would do, I love this. Rain, thank you. Rain is my tech help in the room here. They would measure all of these swings, right? And they would measure the pivots and they'd look for, 5 or 6 that lined up in the same area. In Philly, Fibonacci can be used as support or resistance, depending on whether or not the market is trading to them. The amazing thing that John Novak has done is when you open up your software, it measures every pivot in the market, every swing, every up and down. And I mean every swing, up and down. It does it over a historical time period, which means that if you're 10 days back in your software, you're taking 10 days worth of pivots and it's running calculations on every one of them. But that's not enough. It's taking multiple time frames. It's creating time frames outside of the ones that you may have. You may have 2 charts. It's creating time frames on 10. And it's measuring each and every one of those. And this is what those measurements look like. And it is absolute chaos to be able to take these thousands upon thousands of swings, these thousands upon thousands of alternates, of expansions. But what the software does is it begins to go through and it gauges which is the most important. Where do they happen the most? Where's the highest concentration, right? Where are these coming together? Because these are the areas where the market's likely to react. These are the areas that will behave as support, that will behave as resistance. When John Novak was creating the algorithm for his software initially, 27 years ago, he was working, he had a friend in the pits in Chicago. And that gentleman's job, his only job, was to know where the institutional traders were going to buy and sell, to know where the institutional traders were going to react when price reached an area, if price reached an area. And John Novak got to the point to where his fibs were typically within 50 cents of those key areas, guys. And all of this chaos, Philly, results in these lines. And the lines on their own are great, right? Fibonacci holds to the tick. You come through and you see it hold to the tick, right? But sometimes Fibonacci runs over. Sometimes these lines don't hold. So the introduction of this momentum indicator creates an opportunity for you to not only know where the market is likely to go, right? To know where the market is likely to stop, but you can also understand if it's getting there with momentum. You can understand if you should be taking a shot at a potential long trade or if you should be sitting on your hands and waiting. So for example, weakening momentum at a pivot stop out in areas that aren't broken. My Nexgen users didn't try to take that long right there. They said to themselves, hey, I'm losing these advantages. I'm not taking this trade. So Philly, it's really pretty simple. Fibs are nothing more than areas where the market may react. And we're going to use some very simple rules to keep ourselves safe. And guys, that gap theory, it's trying, isn't it? Price accelerates away. It reaches the mid-band. The large triggers don't follow. Notice how your large triggers are still above that key area. And notice on your small chart. Oh, you're very welcome. Guys, this is 1 bar on your 13.2, right? Look how many bars on your 5.1 are happening within that 1 bar, guys. This is why we use the 5.1 as a refinement tool, taking that overall look, those advantages on the large chart, and then dialing them into an opportunity on the smaller chart. And right now it's simply rules not met. So David S., thanks for getting us going on this look and talking about what we're seeing in the moment, right? Gap theory says that there is definitely a shot that we're probably going to come back up and close this gap. And then we'll let the market decide whether or not it's going to go up or down. We don't have to predict. We don't have to hope. We don't have to want. We don't have to pray. Guys, there's one of those 50-50 trades, right? But it's not coming from a good top. It's not coming from a termination that creates a full reversal. We overran our termination spot. All the triggers got above. We had a clear path to the upside. Guys, 50-50 trades without a good top don't work nearly as often. Isn't that cool? You have a set of rules and conditions that create a statistical advantage. All you have to do is learn them. All you have to do is post your pictures in the class, ask your questions. Guys, fill up your spreadsheet. Make it easy. Let it be simple. Stop overthinking things and get on the path to being successful. Guys, that's my first hour. I'm going to take a second. I'm going to go refill my water. I'm going to rest my voice. As we get into the second hour, I'm going to go through and we're going to look at everything that you guys have posted in the room so far. We're going to continue to talk about the live market, looking for opportunities. In the meantime, if you don't have rules met, guys, scroll back. This was at 9:04 a.m. I imagine some of you guys are going to show me pictures of these. Odds favorable, no terminations, guys. There's a couple of those tails. What did they look like? That one is a pullback to resistance inside of favorable large triggers. That one's a little wonky looking. Maybe not your trade, but certainly opportunities. If you took the trades, come on back. Show them to me. If you didn't take the trades, go back and circle them. Tell me what you see. Let's work on your chart reading. Guys, I'll be back in about 5 minutes, and we will get into that second hour. Remember, crude oil inventories in 18 minutes. Back in a few, guys. All right, guys, I'm back with you. And so, David, let's take the picture, right? We had that first picture. I wonder what's going on. And now let's take a picture again. So we identified the pivot stop out, right? But we said it's not a good top because all the trigger lines have broken through. So we have this divergence pivot. We said the mid-band is probably the first area for impact and almost to the tick, guys, right to that mid-band. We drew a circle that said because of the gap, it's probably likely to close that gap. And then, guys, look at that. Now we're into a divergence high. Look at all the information that you can take without ever taking a trade. Guys, this is your chart reading. Every time you look at the market, you should ask yourself, what do I see, right? Where am I coming from? What is the market doing? What do my trigger lines say? And make this like something that you do every day. Do it in your head, right? Do it on a piece of paper. Annotate it with a picture. My large are up, my small are up, right? But I'm into a termination condition. I don't have areas inside of favorable large triggers. My rules aren't met, but there's an awful lot of chart reading. Is the market going to go up to Fibonacci resistance, or is this pivot stop out going to change the direction? I have absolutely no idea. So I'm going to sit on my hands and I'm going to wait for advantages. Guys, I'm going to show you real quick. I'm going to scroll up to the top, just like this, pardon me. And I'm going to start clicking on the pictures that you guys posted this morning, the things that you are showing me, the things that you want to talk about, guys. This is the part of the classroom where you have the opportunity to use your voice to get all the answers that you want about anything and everything that you're looking at. Guys, Ron got us going today, and he said he's on simulator. He's just practicing. But I can tell you that creating a plan is such an imperative part of what we do, guys. And Ron's plan says, and I know this because I've been around long enough and I've seen it. Ron's plan says that when he has odds favorable momentum on his 13-2, when he has a clear path on his 13-2, he's going to jump in and take just small little pieces of the pie. A little bit of the puzzle there. Strong triggers, jump in, jump out, get your money, get out of the way. And you can see him do it again. Guys, yes, you can take advantage in a move and get paid off the same price. The market moves up and down. It retraces, it retracts, it does all these different things. All you have to do is create a plan that revolves around consistency, right? Something that's tested, that's provable, something that you can do over and over that has been proven to win more than it loses. Gary coming in with one of my favorite kinds of pictures. And Gary, I think maybe you're looking at the wrong chart. Over here, you said price has not hit the fib yet. Oh, you're on your 13-2, right? Okay, 13-2, 50-50 trade, no divergence. There it is, right? So Gary says on two charts, guys, I want to show the simplicity piece of this again. On just two charts, guys, with a 13-2, with a 5-1, you have a beautiful 50-50 trade. You have smalls above the large, you have wide triggers, you have an area that hasn't yet broken but has the potential, you have no divergence, you have a small window of opportunity, right? It's a good one. It's a great 50-50 look. Guys, if you're trading two charts, rock star trade. If you're trading a larger chart, you're directly into a termination condition, right? You have weak triggers. You're in a downtrend. Guys, too many charts can create too much information. Too much information will make you second guess things. And the average trader will look to latch onto the chart that gets them into a trade rather than the one that keeps them out of a trade. In this case, the 21 probably would have kept you out of a trade if you weren't a great chart reader. You wouldn't have noticed that there was a great bottom, that there was a higher divergence, that everything set up off a support that just held and reversed the market. That's a beautiful trade. It's a great chart read by Gary. He said he's still waking up. Man, if you're not awake, don't trade, right? Give it a minute. Get that brain clear. Great read, Gary. You don't have to take a trade to take a picture, right? You don't have to take a trade to annotate a chart. Everything says down. Everything says clear path. Didn't take the first one. Didn't take the second one. And then that's not a loss of momentum so much. Well, yeah, 1, 2, 3 losses of momentum. It pushes down and it breaks that first one. You don't get a loss of momentum here. You certainly could have made a case for the short, but the window of opportunity, because the triggers are split, are big, guys. You see that? When the triggers split, is it going to go to the lower ones? Is it going to go to the higher ones? You're just not sure. Those trigger lines, one on top of the other, create an advantage. And then, Gary, there's that 50-50 look, right? No divergence, small window of opportunity, in at 92. It goes up almost 4 points worth of profit before divergence prints. It takes you out, and that was 60 minutes. S&P not doing a lot. Wow, 60 minutes for that to happen. You have to be very comfortable with your rules to sit through a trade for 60 minutes, guys. Normally, we're in and out in a matter of minutes when the markets are moving. Here's Ron. Waited for it to clear the mid-band with odds favorable momentum. Didn't hit anywhere yet. And a quick little momentum trade. Base hit, $100. Nice trade, Ron. Consistent. Big fan of consistency. Conrad. All right. Here's your entry. I love it. There's that look, right? Pivot stop out creates the full reversal. Full reversal gives odds favorable. Odds favorable. Where's your entry? There was your first entry. There was your second entry. And you said, you know what? I just want to be sure I'm going to let those small triggers go in the direction of the trade. I like this entry, Conrad. I like this one better because it's a rules-based entry. But I think that if you just woke up, that's a good one. Guys, notice how when divergence prints, Conrad's probably thinking, man, it's a 50-50, that divergence prints. That simple act of letting the small triggers get in the direction. Notice how green, 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 right? Green, green, green. Every chart agrees. Every chart agrees for the trade, and it makes those trades a little more effortless. Absolutely, Conrad. News in 5 minutes. Guys, the simple act of letting all of your charts agree creates an advantage. All right, Alan, let's see what you did. You started to feel doubt when the next pivot set up and you placed your order. You placed your order without stops or targets. You tried adding them. Got too much emotion in that trade. That happens sometimes, doesn't it? Alan, can we talk about why things are pretty solid here? It all revolves around this, right? Look at that good top. That's a pivot stop out at resistance. Man, that's a market stopper, isn't it? And it did. And then you have what could only be identified as screaming momentum. It happened so fast that your trigger lines got a little ugly here. And it happens. You didn't get it here. I think your best entry was right here. First shot's always the best shot, I think. If you took this one, you're good. You made some money. Maybe you took the second entry. And when you come down here with those split triggers, the one thing that I notice, and I really do like this, is that every chart agrees, right? Odds favorable with nothing in the way. Smalls are down. They're outside of the large. The large are down. Synthetics are down. I love your entry. Your pivot was in place. Getting in at 37, you've got about 10 ticks of risk with this much momentum. But hey, you know what you did? You got in at the bottom of the window. So great job on that one. Let's celebrate that victory. That's some trust. You sold it when the market was coming up. Very nice. Guys, it's annoying, but I don't forget anything. So Alan, let's celebrate the victory. And if you get in with no stops, whatever, just fix them. But ask yourself, what changed? Did the momentum slow down on the 13.2 after you got into the trade? Not at all. Did the path suddenly become blocked? Not at all. You still had every advantage. You still had everything down. You still had your areas, and you even had it going in the direction of the trade. This is you getting to break even just a little quicker than maybe you should have. Does that make sense? Stop goes up here. Yeah, we all do it initially. It's scary to watch the market come back against you. And guys, this is where trust in your rules becomes imperative. If you truly trust your rules, you're going to look left and go, man, they're going to have to come get me. Look at that momentum. Look at that great top. Look at that clear path. These guys are going to have to come and chase my stop if they want my money. And you'll get to that point through repetition. You'll get to that point as you develop more and more trust. But Alan, it's a great trade, and your entry, virtual high five coming over the airwaves to you. Mike M, let's see what you did. Mike M says, man, termination. Mike, I hate to nitpick on such a pretty chart. Are you in here? So that first one's a termination. Never creates the full reversal, right? Not a good top yet. That's that, it's a divergence pivot, pushes all the way to support. There's your gap theory. And then it retests. You guys want to see something cool? If you ever wondered why I say the same thing every day, look at Mike's picture real quick. And then, guys, I want you to go back to the user guide. You don't have to. I will. And go to tops and bottoms. And I want you to look at this picture. All right, so we're looking at that picture. Oh my gosh, isn't that pretty much the same pattern? Guys, this is why we study. Mike, do you notice how it pushes all the way back to support and those large triggers don't follow? No shorts yet, right? You showed great restraint, great patience. And then we get a pivot stop out at Fibonacci resistance. And we know that this is powerful. It adds powerful to the top, which, what does that do? That adds confidence to take in these trades. Get in, make money, and guys, look at this. He gets in again, double dips in this area, makes money all the way to the bottom, all the way to those one-to-ones where we're starting to lose momentum, right? Divergence prints. Mike, this is beautiful trading. It all starts with a great top. It relies on odds favorable momentum, and risk is reduced with the pullback. Nicely done. Mike's entry is not in an area inside of favorable large triggers, but it's still a great entry. Why? Because price is probably going to close the gap to those large triggers, and it did. Just one good top. That's it. Because, Mike, remember that the recipe, and guys, your charts bump us into lessons. They really do. The recipe for a strong top or bottom starts with a termination condition, right? So you get the termination condition, price reaches the area, no triggers through, it's a termination condition. But a good top or bottom is when that termination condition creates the full reversal. And that's the second half of the equation, guys. And most everything you do with this software can be broken down into two steps. Price reaches the area, no trigger lines go through, it's a termination. A termination creates a full reversal. Now it's a strong top. Now it's a good top. You'll notice that we never got that full reversal, not on that first pivot. And it didn't quite make the Fibonacci area. And then it makes it. And you recognize the good top, creates the full reversal, provides the odds favorable, and you make money all the way down. And let's see, that's 18 on the first. I see 2 in and 1 out. Did you hold one of your contracts? You did. So one contract you made $400. One contract you made 18. That's 580. And then 36 down to 10, 26, 520, 580, and 520. What is that? $1,100? Mike M. Goal met. Go play golf. Go fishing. Guys, one trade or one set of trades in one single move. That's awesome. That's the goal, isn't it? What are we doing here? We're trying to make money. Might as well have an awful lot of advantages to make it easier. Mike, that's absolutely beautiful trading. Nice job. John in Alaska. I wonder where he lives. Dun, dun, dun. 13.2 says high probability trend trade. Let's see where you got in here. 49.25, 49, 4298. 4298. So you got in right here. Smalls are through, large are not, no divergence. It pulls back to the midband inside of favorable large triggers. Anchorage. I was kind of kidding because it says John in Alaska. I figured it was Alaska. I don't know how you guys do it with the darkness. John, the only thing that I might say about this trade, and let me know if you agree, that's your area of support inside of favorable large triggers, right? Still working on that trust a little bit to get in at the best of the best. But the difference between 95.50 and 98 is 2.5 points, right? That's 2.5 points of risk that you have to put onto a trade. That's also 2.5 points of profit that you just took from yourself. It's a beautiful trade. Learn to trust those areas inside of favorable large triggers. Rule number 3 goes a long way to helping you get paid. It really does. Great entries create manageable trades. So if for some reason the market decides to turn at this fib, you've got enough room to make a little money to get to break even to never have to worry about it. Beautiful trade though. Great read. Every advantage, every chart agrees. Debbie says 50-50 with no divergence, meaning that the smalls are through, the large are not. Odds favorable momentum. Every chart agrees with down, and Debbie, you take a pullback to a midband inside of favorable large triggers. You keep your stop in place until you get a reversal bar, and then you get to that first target, that potential stopping point, and you said, you know what, I'm going to make a little money and I'm not willing to give any back. Well, you were willing to give some back. And Debbie, I'm not sure what your plan is for 50-50s, but 2 divergences on a 50-50 with weak triggers, there's a big potential for slowdown there. But I know you have a plan. You have an if-then scenario each and every time you take a trade. You managed out. Nicely done. Guys, when you learn to read your charts, you'll be able to manage. You'll be able to turn big losses into small losses, small wins into big wins. All right, so David S., are you ready for the next step in your education? Do you have Snagit or do you have TechSmith Capture? Which one are you using? Because I want to use the one that you have. Okay, so I'm going to open up my capture real quick, and we're going to do something. Let's make that nice and big so that we can see it. And guys, this is for my new users, not so much David. David knows how to take a picture. It's click and drag, right? Click and drag, I'm getting my entry chart. I'm getting my my large chart, and then I'm clicking the camera. And I've got both of those, and I have all this great information in my capture image preview. So guys, if you have capture image preview, whoops, wow, that decreased a lot. I love this phrase. It looks like a trend trade opportunity, but I'm not sure. So how can we be sure? Are you ready, David? We're about to blow your mind here. Do you have your checklist in front of you? This is going to be the difference between me teaching you to, giving you a fish and teaching you to fish. I'm going to use my call out button. And the only thing I'm going to focus on right now is, do I have odds favorable momentum? I'm not sure if I have a trade. Let me double check. David, do I have odds favorable momentum? Are my small triggers above the large triggers? Are the large triggers wide and angled in the direction of the trend? If you need a quick cheat, that's odds favorable momentum down there. What do you think? You think yes? All right. So, and guys, this is why we annotate charts. Because David, now what we have to do, and we're going to come back to the annotation. Now what we have to do is we have to go to the user guide, and we have to go to the T3 trigger lines, and we have to pull up that picture where odds favorable momentum is defined. Small triggers are crossed up and above the large triggers. Large triggers are wide, they're angled in the direction of the trend. So David, strong triggers means that there's space between the two, that the small are above, that the large are wide and angled in the direction of the trend. So guys, this is how you're going to annotate. This is how you're going to focus. Is when you're annotating a chart and you go through, you don't have to guess, right? This is exactly what odds favorable momentum looks like. So David, I'll ask again, do you have odds favorable momentum? Nope. So let's answer the question. Guys, this alone, if you're a rules-based trader, should be enough to keep you from a trade, right? I don't have the advantage of momentum, but maybe everything else is perfect. So let's don't stop the analysis. Let's look. Do I have a clear path? So David, once again, if you tell me whether or not you have a clear path, we can make a decision on whether or not there needs to be a termination condition lesson, right? So what do you think? What's the definition for a termination condition? I'm going to write this out. I'm going to lead the witness a little bit. A termination condition means that price has reached an area, but the trigger lines have not broken through the area. So one of those areas that can be a termination condition is a divergence high. So I'm going to circle that divergence high. And when I talk about a trigger line breaking through an area, both the smalls and the large have to get north of that divergence high for it to be considered a clear path. So David, price reached the divergence high, the large triggers haven't broken, and the small triggers haven't broken. So if we just go through that textbook definition of a termination condition, and let me give you guys a cheat sheet. Termination conditions at a high. Here's 3 examples using one-to-ones, using Fibonacci resistance, and using a pivot stop out. That looks familiar, doesn't it? That looks very familiar. Guys, the market repeats itself over and over. So David S., did we have a clear path? Are small and large north? Nope. And guys, this is exactly how I learned the software as well. Is I had to go through and I had to have a set of rules that create advantages, right? So David, so far, We don't have momentum, nor do we have a clear path. At this point, it should be, I'm not even going to look for an area inside of favorable large triggers. But I'm a glutton for punishment. Let's define favorable large triggers. Wide, angled in the direction of the trend, overlapping one on top of the other, right? I've got synthetics up here. I've got large all the way down here. I do have a midband inside of the large, but not really rule number 3. David, thank you so much for this. So we can replace the questioning, guys, if you go through this process every time. We can go from, is this a trade, to, are my rules met? And your job in the beginning is to have that quick reference, right? To be able to go back, to be able to compare. Are my rules met? David, this would be a great one to keep on your desktop. Quick visual references of what it means to have the rules met. I'll put it in the room one more time. And guys, my goal for you, and this isn't just for David. David's just the one that's brave enough to post pictures and ask questions right now. My goal for you is to never have to ask me if it's a trade, but to show me, hey, my rules aren't met. My rules aren't met. Or like you are presenting it in a court of law. Here, Mark, my rules are met. I had odds favorable momentum. I had no termination conditions. And then post that picture in the room. Does that make sense to everybody on that little path to get you there? David, I hope that you find that to be helpful. Always write your rules, guys. Always write. If you're not sure if it's a trade, go through that checklist. Do I have the conditions met? And if you don't, it's just not a trade, right? Pretty cool, isn't it? You guys want to see what the market looks like when they can't make up their minds? Little bit of overrun, straight to the midband, large triggers don't follow. Right to resistance, back to the midband, large triggers don't really follow. Pivot stop out at resistance, right back to the midband. Guys, do you see that fight that's happening? And now we have a pivot stop out. But this is the first time where everything starts to agree a little bit. And what do we think here, guys? No triggers through, right? Who went short hoping? I still don't have a clear path, and that's frustrating if you've been sitting on your hands for 2 hours waiting for a clear path. But guys, the S&P is not giving a clear path to the upside. Not yet. No matter what happens next, the rules aren't met. Nope. And David, I'm glad that you said that. Pretty common misconception. It really is. And that's why I try to go through it. So there's 2 ways to look at these divergence highs and lows. So the first time you see that, and let's talk about when divergence prints. Maybe we can get a live example. That one doesn't have any divergence potential. So David, right now, divergence potential. And do you see how it was the 3rd bar? That was pretty quick. When divergence became true. So this is potential until about right here. This was only potential until about right here. This was only potential until about right here. So the termination, the divergence happens on the pivot when the confirmation process is done, and that typically takes it's like 2 bars, 2.5 bars to make it true. So right here, it's potential. Right there, it prints. So we can't use these lines as termination conditions because they happen so far after the pivot. But when price comes back up, and remember the recipe for a termination condition, price reaches an area where your trigger lines, Now this divergence high becomes a line in the sand. The triggers never make it through, right? And it pushes back. And because this divergence happened, this divergence stops printing, and it becomes another line in the sand. And look at that. Sure enough, it happens again. And it may happen this quickly, or it may happen from all the way back here at 9 a.m. This divergence line doesn't come into play again until all the way over here when price reaches it. Does that make sense, David? And everybody, really, not just David. So when we look at it from the highs, this is only a pivot, but when price reaches the area, now it becomes a termination condition because the trigger lines remain below. And then at lows, we see the exact same thing. This is only a pivot, but when price reaches that previous pivot, that divergence low, and the trigger lines remain above, now it's a termination condition. Guys, these are great pictures. Absolutely. These are great pictures to get into your spreadsheet, to look at every morning. Remind yourself, this is a termination condition. This is what it looks like. And guys, both of these pictures have the recipe for a termination written right on it. This could be one of those things as a brand new user, you go into the day with that awareness right off. And then just to compound on that a little bit, David, one of the reasons that we use these divergence highs and lows, and they're really one of the most forgotten parts of this termination conditions, guys. Anytime the market has a divergence low or high, that line that it creates represents a specific and exact point in the market where not only could the in control force, whether it's buyers pushing up or sellers pushing down, not push any further, it's also where the other side of the coin stole their momentum. So what happens is, to a divergence high, the buyers are in control, right? Everybody's pushing up. Everybody says go. And then the sellers steal their momentum. It creates that pivot. It forms that line. Well, traders are an angry sort, and very often they go back and they retest that line. They go back and they push and they try to break it a second time. If the sellers aren't going to let them get away with it, that's when those pivot stop outs happen, right? Next-gen users, you have the advantage of seeing that point in the market, seeing that line in the sand, and using those trigger lines to determine whether or not the sellers are going to put up a fight or whether they're going to let the buyers go through. Maybe this was just a lot of profit taking, right? Maybe this was a lot of people going short and they're like, oh, I only got half my contracts. Let's let them come back up and I'm going to unload on them and get the rest of my contracts to push it down. So I made this picture for one of our clients. Guys, it's a key price where failure has already happened. Therefore, because the market moves cyclical, because it's psychological, we respect that area as a line in the sand. And you can see, once again, everything set up, that line in the sand held again. Guys, you're watching a huge fight in crude oil right now. Eventually, you're going to get a clear path. Eventually, you're going to have odds favorable momentum. But right now, you've got trigger lines stuck between two fibs. Guys, raise your hand. Give me a Y. Tell me that you recognize that you have termination conditions holding in both direction, and you have a very established range that market needs to break out of for you to have a clear path. Awesome. What an advantage, right? Guys, how many people are getting their asses kicked? Sorry, didn't mean to swear. How many people are having a disadvantageous situation, hoping the market goes up, hoping the market goes down, wanting it to go up, wishing it down? Next-gen users, all you have to do is embrace those 3 simple rules on 2 easy charts, and there's absolutely no reason to get caught in this mess. Congratulations. You made a great choice. You bought the best tool in the world. Now you're just learning how to use it. Ron. And guys, same thing. The market's coming down. It's coming down. Maybe there's opportunity. Maybe there's not. It doesn't look like there was. There's one of those 50-50 trades. Let's circle it. Did we miss an opportunity? Did I miss an opportunity? Where's that circle? No divergence, pullback right to the area of resistance inside of favorable large triggers, and it continued right down to support. Oh my gosh. Patterns, patterns, patterns. Aren't they amazing? What do I have now? Now I have a clear path. All of my trigger lines are below support. It's beginning to act as resistance. My smalls are kind of riding the large. It's not my best momentum look, right? But I have a clear path. I've got one potential line right now where the market may continue in the decision that it decides to. No divergence potential, so I have a clear path. But I don't have the best momentum. I do have a small window of opportunity, but I don't have the best momentum. Guys, this is a medium probability look. And if my stop is outside of the window of opportunity, outside of that area where it's likely to continue, I can make a decision on whether or not I want to take a low-risk attempt at this Fibonacci resistance holding to finish the move to the next key area. It may not. I have absolutely no idea. But you see how all I did was go through my checklist. All I did is say, what are my advantages? What are my disadvantages? Guys, this trade is lacking momentum considerably. Smalls have weakened the large on both charts, right? Now my area of resistance has fallen outside of those favorable large triggers. If I chose to take this trade, guys, I probably have 4 ticks of risk. Is it worth 4 ticks to potentially make 8? That's only something that you can decide, guys. That's a decision that you'll make for yourself. 48A2 is an area that's likely to stop the market, right? Price retraced to resistance. All of my trigger lines remain below. Isn't that the textbook recipe? Support breaks, it begins to act as resistance. All of my trigger lines are below resistance. Resistance is likely to stop the market. And once again, guys, just to blow your mind, I want you to look at this look right here. And I'm going to go back to termination conditions, tops and bottoms. Area breaks. Support holds as resistance. Straight from the user manual. It's never a guarantee. But what direction is the trend, guys? What do you think? Up or down? Philly, are we up or down right now? Anybody? We're down, right? Do we have momentum? Not really. I've given away an advantage, haven't I? A lot of you are going to try and take it anyway. They're going to say, you know what? I realize I don't have momentum, but it's worth the 4 ticks. Some of you are going to say, because every chart agrees. Because everything says down. Whoops, what did I do? Because the path is clear, I'm willing to risk 4 ticks. I'm willing to take a small loss at a shot, guys. And if you did it, your stop was somewhere right up here. If it goes down, you look like a rock star. If it goes up from here because there's no momentum behind the market, well, then you've only taken a small loss. This is a medium probability trade. It has to be managed assertively. Has anything changed? If your entry was just below resistance, has anything changed since you got into this market? No. What are we waiting for to reduce risk, guys? Not that you could really even reduce it much more. That spot where the market shouldn't go was about right there, wasn't it? How much risk is that? From 82.25 to 83. You're looking at about 3 ticks of risk. You really can't reduce it much more, can you? Be fun to come back and see what that one does. Mike, let's see what you did. Mike, odds favorable momentum, no termination conditions, area for entry inside of favorable large triggers, quick profits, I love it, making money, Higher divergence with weak triggers, you get out for break even in a tick. Beautiful trade, Mike. He had a clear path, right? He had momentum. He had an area. Guys, great entries, make manageable trades, 4 or 5 ticks of risk going into it. And then chart reading, guys, 2 divergences, higher pivot, weak triggers, it may push up higher. And that's exactly what it did. It pushed up all the way to that resistance that was likely to stop the market. And then it looks like it headed back in the direction. Mike, beautiful trade, great management. Great entries. Make manageable trades, guys. Sometimes if you know whether it's high or medium probability, it helps you. It helps you manage. It looks like crude oil's trying to decide what to do too, right? Going to drive yourself nuts watching fluctuations. Guys, there's 3 divergences right at fibs. Absolutely no trigger lines broke through. Remember, divergence lows are an exact price, aren't they? Price did not reach that exact price. I've got small below the large. I have large wide. They're angled in the direction of the trend. If a reversal bar prints, let's use our drawing tools from the bottom of the large triggers to the top of the large triggers, right? And now let's squeeze it from that lowest point of resistance to that highest point of resistance. Large and synthetic are overlapped, angled in the direction of the trend. The only thing that changes the scenario, guys, is if they hit that blue line. Ugh. Now we've reached a Fibonacci area, right? Now we've reached that divergence low. Absolutely no trigger lines have broken through. And guys, do you want to be the first person to try to break through a line in the sand when the market's been respecting them for the last 2 hours? That's up to you. But do you see how the chart read, how quickly that chart read can come together? How quickly you can identify termination conditions? How rapidly you can identify an area where the market is likely to continue using 3 simple rules, guys. 3 simple rules, 2 charts. Don't confuse it, don't add to it. And maybe take a minute to read John's book. Little book plug here, guys. How to Commit Financial Suicide, One Easy Step by John Novak. And note, there's only 1 page has any information. The rest of the book is left blank intentionally. Chapter 1, warning signs that your friends are in trouble or trading against strong triggers. And guys, of course, this is tongue-in-cheek. This was made as a joke, a little PSA using humor. Chapter 2, warning signs your friends are not paying attention. They trade in determination conditions. Seek help immediately. How do you suppose this joke came to be, guys? Because people were trading against strong triggers and losing. They were anticipating areas to hold rather than waiting for them to hold. Trading in determination conditions. They were anticipating, hoping areas would break rather than allowing them to break. You don't have to do that, guys. You have Nexgen. You have the ability to recognize these areas long before we get there. You have the ability to recognize when your advantages are going away. And then you have to make the decision on whether or not you're committed to rules met or rules not met. Loss of momentum and it pushes higher, guys. That's a beautiful lesson for those of you that are trying to take trades without odds favorable momentum. Notice that when momentum was its strongest, like Superman flying through walls, boom, boom, bang, bing, pow. As we begin to lose momentum, look at the bounce. As we lose even more momentum, look at the bounce. If I take every area of Fibonacci off of these charts, guys, you're going to see this. Market strong, loses momentum, there's a turn. Market strong, loses momentum, there's that bounce. Loses momentum, there's that turn. Indecision, bouncy, bouncy. Every now and then. But that may have been a termination condition. Let's see. Let's add indicators back on. Let's look at the correlation. Odds favorable momentum Let's see if it hit something or if it was one of those 50-50s. You can do this all the time, guys. You can do this all day long. Holy smokes, 50-50. Divergence to the tick, or Fibonacci to the tick. Pivot stop, or divergence high to the tick. Little bit of overrun, right? But price reach, triggers never went through. There's one of those pivot stop outs. Guys, if you don't believe in the magic of Fibonacci, if you don't recognize it, embrace it, what amazing advantages that you have getting into the market, guys. Who's been a trader in a past life without Fibonacci, without Nexgen, and thought, man, if I had these lines, it would have changed my life? I hear that all the time. If I had had these lines 20 years ago, it would have changed my life. Guys, the software can change your life. It's up to you to do the study. I'm going to take a break. If you ever have your price run off the screen, hit this F. Boink. Right back. It'll stay there. Let's see what happens. Good bottom or bad bottom, guys? What do you think? Price creates a reversal. Bad. Absolutely, David. Absolutely. Bad, bad, bad. Not a termination that creates a full reversal. Price is coming up to a midband, coming up to Fibonacci resistance. Look how far away those trigger lines are. I wonder if there's a pattern that could create an expectation. We'll find out. Guys, I'll be back in 5 minutes or so, and we will get into this last hour. I want you to ask a million questions in this last hour, guys. Let's talk about what you want to talk about. I don't care what I want to talk about. I know this stuff. I want you to know this stuff. I'll be back in about 5. All right, guys, last hour. Here we go. How's everyone doing today so far? You guys taking trades? You guys managing trades? You following rules? You writing things? Right to Fibonacci support, huh? 50-50 look with divergence, and it didn't go. Guys, it hasn't been the most forgiving markets lately, right? The S&P's been a little bit slow. Crude oil got caught in a range. There's a lot of indecision going on. Guys, all we're doing is we're trading the emotion. We're trading the ups. We're trading the downs. And we're letting someone else determine the direction. We're letting someone else decide what the market's going to do. I like to show this picture to my new users. Two types of people in the market, guys. There are the sharks and the remoras. This is my analogy. The sharks are the big money investors. The sharks are the guys that are going to create momentum. The sharks are the guys that are going to be respecting these Fibonacci areas. They're going to be reacting to these Fibonacci areas, guys. These are the apex predators. They have the money. We're going to be the remora. We're going to take, when they create the momentum, when they have a clear path, there's nothing in their way that they want to react to, guys. We're going to take that high probability trend trade. We're going to get paid in small increments. Every trade doesn't have to be a home run. We don't have to be the first person in from a top. We don't have to be the first person in from a bottom, guys. There's your guy that tried to be first. He is in that mouth. Know your place in the market. If you remember that you're not in control, it makes it easier. If you remember that you're not establishing the momentum, it makes it easier, right? Expectations, guys. Expectations through patterns. Looking at Fibonacci, determining whether it's likely to hold or break, right? Looking at trigger lines, deciding whether or not there is momentum or whether there isn't momentum. Is it a good top or is it a bad top? Where are you coming from? Put this together, guys. We're going to minimize the time it takes you to get to where you want to be. We're going to do it together. This has been written like 4 times. Guys, to minimize your learning curve, post your pictures in class. Every trade, win, lose, or draw, post your pictures in class. Can't stress that enough. And if you're brand new in this classroom today, you know, Philly, I hope you're seeing how people are posting, how they're getting feedback, right? Guys, those of you that aren't winning consistently yet, that still have questions, post your pictures in class. Let's talk about them. You don't have to post a winner. Guys, you're going to learn more from the losers. The idea is that if you win and the rules are wrong, you may have a short-term victory but a long-term failure. How are you going to know the difference? To be sure, you need feedback, guys, and that's what I'm here for. Monday through Friday, 9 a.m. to 12 p.m., I'm in this class, live feedback, anything and everything that you want to do. It doesn't have to be about a trade. It can be about one of the rules. It can be about a concept. Guys, you can submit your management plan to me and say, Mark, I need you to hold me accountable to this. You can send me your trading plan. Mark, I need you to hold me accountable to this. Guys, there's a lot of you in here, and I know exactly what you do and why you do it. I know why you break rules, where you break rules, and it's one of the great things about this classroom, guys. There's no risk of loss, right? No capital loss. If you're on simulator, if you're practicing, if you're just getting better, you just need someone to tell you what you did right or wrong, guys. That's what I'm here for. That's the whole reason I'm here with Nexgen, is to work with you so that you can get where you told us you wanted to be. Use this outline for education. And that's that picture. Sorry, my links don't work on this one. That's that picture, right? This is your path. Pictures, use a spreadsheet, use this outline. Make sure that you're following it. Make sure that you're going through. Guys, it's been proven to work. The people that follow this path get to where they want to be, period. The people that follow the rules win more than they lose, period. I believe it, 100%. Did I? I didn't forget your trade, Safia. I didn't see it, and I apologize for that. I'll go take a look at it. Study those pictures, guys. Present them in class. And thank you. Guys, if I ever miss a picture, it's never because I didn't want to look at your picture. I just missed it, and I apologize for that. Guys, annotate your charts. Create that database on the spreadsheet. Define your plan. Take those trades. That's the path, guys. That's how you get to where you want to be. And if you post in the room and that Yahoo doesn't see it, do what Safia did. Say, hey, Yahoo, go look for my trade. I'm looking. There it is. Sorry about that, Safia. If it was a loser, she wouldn't have been so vocal, right? Just kidding. I love it. You said it's a 50-50. Is the market coming from a good top or bottom? Well, not quite. I know it's not true. That's why I joke. If it were true, I would never say it, right? Safia, you do an exceptional job of showing me everything, right? I think you're doing great. Not quite a 50, or not a good top though, right? Because it's not a termination condition that creates the full reversal. All the trigger lines got above. Yeah, it's just a pivot. But that's okay, because you definitely had odds favorable momentum, and it was a 50-50. Smalls are through, large are not. Absolutely beautiful odds favorable. Area likely has the potential to break because of that momentum. No divergence, strong triggers, and what a beautiful entry. What a great entry, and you gave it room, right? Guys, nothing's exact. You take quick profits, get paid, and then because of the momentum on the 13-2, right? Because everything says down with momentum. I love how you let that one run, and you probably could have let that one go to the fib. That's the only thing. You were going to let it go to the fib, but you saw divergence and moved it up. I like that you said that. Did you see divergence, or did you see the potential for divergence? Big difference, right? What's divergence? Yeah. Don't let divergence potential scare you out, especially because by the time you got out, not only did you have odds favorable momentum, but you had a clear path, right? That little bit of divergence potential is going to scare you into moving your stops, and they see you. They know. They know where those fear stops are. I got stopped out low tick twice yesterday. It's like they had a camera on me. And you'll see it, the divergence potential. Like this may have divergence potential to the upside all day long. Look at that, and another down bar. Divergence potential and another down bar. Divergence potential and another down bar. And look where it went to, guys. If you want to take just a second to be absolutely blown away and mesmerized, that was 11:03. And here at 11:18, guys, look what just happened. Guys, patterns repeat themselves every day. And if you tried a long somewhere between here and here, you probably lost. It was a great trade, Safia. You can. I won't, David. There's a look called an edge trade. And guys, I don't mind sharing other trades with you. Do you need them? Ask yourself that, though. Do you need them? What is it about human nature that makes us think that we deserve every move in the market, that we should get paid on every move in the market? I've felt that way. So you ready, David S? I'll show you how to do it. You're going to have to go through and study it. You're going to have to go through So Mike, I'll answer your question 1 second. So check this out, David. Super strong momentum, but this requires a larger chart, like a 21.3 or 34.5, depending on what market you're trading. But with this much momentum and a clear path on a 21.3, we'll say, in crude oil, when price on the 13.2 pulls all the way back to resistance and the large triggers don't follow, and then I get a market flow signal, see how you have to add 2 more charts to take this trade? This becomes a great trade for continuation down. You can't do this with 2 charts. So, David, this may be something that you add later as an edge trade. But make money simple first, right? Go for simple first, but it's just the same chart reading. It's momentum. It's a clear path. It's an area where the market is likely to continue. But it's that whittle down process. It takes a little bit more because you don't know if it's going to be these 1-to-1s, or if it's going to be this fib, or if it's going to be this fib, right? So if you just jump in banking on the gap theory, you may get run over a couple times until you actually get the correct trade. I love the edge trades, but not there. All right, so Mike, you said call divergence potential divergence that is moving with the bar. So I'm going to focus on the language of that one. Divergence potential is exactly that. The market has the potential to have divergence. And let's see if we can find a bar that illustrates it, right? And of course, not one bar has the potential for divergence right now. So when that negative number flashes, it's just potential. It's not divergence that's moving with the bar. It can't be because it's an exact calculation, if you will. So the potential might be present, which means that, I wish that I could get divergence potential on a chart. That would make it so much easier. We'll do this. Let's go to the glossary of common terms and let's talk about divergence. Everything happening down here is off screen, guys. You can't see it. It's written in the indicator so that you don't have to do any comparisons, no calculations. It is 100% automated for you, right? Crude oil now. There we go. So Mike M, this is just the potential for divergence. It's not true. Divergence isn't present, but it might be present. If those calculations sort themselves out, and there is a discrepancy between MACD BBs and the price that's coming down, this divergence has the potential to be true. But right now it's just divergence, and you can have divergence potential for an entire run. But you actually have divergence when the line prints, when the negative number prints. And with everything screaming up, the likelihood of this divergence becoming true is small. But do you notice over here? 1 tick up creates the potential for divergence. 1 tick down, that potential is gone. You can drive yourself nuts trying to trade potential. It's easier just to trade it when it happens. Use it when it happens. And then you can use it. Let's say you're in a trade right now, Mike, and you say if divergence is true, I want to exit the trade. I can put a stop about 2 ticks below this reversal bar marker because it takes those 2 bars to determine whether or not that divergence is going to be true. So let's say that I'm in a 50-50 trade long, right? I got in just above the mid band, and I'm saying to myself, I'm in a 50-50 trade. And if divergence prints, I want to exit that trade. Or maybe I'm looking to enter a 50-50 trade. And I say, if divergence prints, then I'll cancel my order. I'll know that that divergence is true on the 3rd bar. Does that make sense? John Novak used to say, there's the potential that a plane will crash through your house and kill you. But until it does, there's no reason to live in fear of it, right? I kind of hope this one prints because it'll let you know. But I've seen the market move 30, 40, 50 points with divergence potential the whole way, and never have it truth at all. So I'll use a reversal bar marker, and if divergence is enough for my rules to take me out of a trade, I've got that 2-bar gap, and I'll have a stop right in that spot. Guys, the gap theory came true, right? Flat triggers, not odds favorable momentum. Split triggers, not a great look. Very often when that gap theory happens and it comes from a bad bottom, the market likes to finish the move down to that next key Fibonacci area. It's not guaranteed. There's not a trade to take right now, right? Because we are in an uptrend, because the smalls are above the large, because this Fibonacci area is dissected, one above, one below. Notice how the market dances around that fib on the smaller, faster chart. Just waiting for rules to be met. Guys, great questions today. I think we got some really good lessons in. Based on your questions, I appreciate them very much. Keep them coming. And they're just stuck, aren't they? They're trying to figure out what to do. Poor crude oil. This is your day in crude oil. Termination condition at 7:04 a.m. pushed it all the way to support. And then they push it all the way up to resistance, where these guys fought and fought and fought and fought, and they get it right back to support, and the buyers take over again. Guys, crude oil has been a whole lot of nothing for the most part today. It happens some days, right? Some days you're going to catch 10, 15 trades. Some days you're going to catch 2. Those are the days, guys, when it's not giving it away, when it's not moving, when it's not flowing the way you want it to. Those are the days when your rules keep you from getting chewed up, when your lack of opinion keep you from getting chewed up. What do you guys want to talk about? Philly, any questions? Any concepts you want to revisit? Awesome. I'm glad it did. Imagine how amazing it's going to be in 30 days, Philly. Imagine where you're going to be in 90 days. This time next year, oh my gosh, you're going to teach this class. Rules not met kept you out. That's one of my favorite phrases, guys. Rules not met, no trade. Couldn't trading be easy if your only options were rules met or rules not met? Wouldn't that take all the stress off? If I can't check yes, I'm not going to enter the trade. Why? Because when I check yes on everything, I have a statistical advantage, right? 70 to 80% of the time. Guys, if I take 100 trades and this checklist is met, how many can I expect to win? How many should I be looking for? What do you think? I'd say about 70 of those have the potential to be winners. What's the ugly side of trading that nobody wants to talk about? 30 of those have to be losers, right? It's a cost of doing business. It's paying rent. It's overhead fees. 30% of the time, we will allow the market to be wrong with dignity. They didn't know we had all those advantages in place, guys. But if you're taking $400 on every trade and you're only losing $200 on the ones that you don't, what's 400 times 70? $28,000. And then what's minus $6,000? Whoops, which is what, 22,000 every 100 trades, hypothetically. How many trades do you suppose you'll take over the course of a year? Probably at least 15 to 20, or probably 150 to 200 a month. I don't know about you guys. I could do all right at $33,000 a month. I could live pretty comfortably. Maybe that's not what some of you are accustomed to, but that would sit just fine by me. It's just all about waiting for advantages, guys. Use that checklist. Embrace it. Price closed the gap, didn't it? Just waiting for that clear path. Beer money. Amen. My beer money lasts a lot longer than it used to. 50-50 trade with divergence. What do your rules say, guys? What do your rules say when price reaches an area, the smalls break through but the large don't, divergence prints? Are you willing? Guys, 50-50 after a range, this is either a big winner or you're going to get knocked out quick. I feel like embracing the path, guys. Embracing the path is what's going to get you where you want to be. I want to share this with you. So this is one that taken from a PowerPoint that's being created right now. But I think that it's really solid for what we're looking to do. Debbie, you say you'd love it, right? Gary, beer money. Joel, you don't need 27 years, right? You don't need 27 years. I don't have 27 years. I have less than 3 years, guys, and I'm teaching the class. I've made every mistake you would ever hope to make. Every mistake you have ever hoped to make. Guys, what's cool is that you don't have to hit home runs. You don't have to make $10,000 a day, right? $500 a day is only $250 a contract, guys, and it's realistic. Does anyone in here not believe that it's realistic to make $250 a contract a day? With the highest probability trend trade, with every advantage in place, with the best entries, could you do it? Mike's done it like 10 times over today. 1 to 2 winning trades a day, guys, is all it takes to hit 500. 90% of what you do is watching the markets, reading your indicators. 10% of what you do is taking those advantages. But you have to learn them, right? You have to study them. They have to be easy. It has to be second nature to enter that market with the advantages present, and you have to trust them enough. Almost 1,000 a day, David? Did you follow the rules? I know you're still in that learning process. There we go, the yes. Guys, most markets have the opportunity to do at least 4 to 6 high probability trend trades a day. Not always. You can trade multiple markets to increase your trading opportunities. Guys, I watch the S&P and crude oil. Some days I'll watch NASDAQ if I'm hopped up on coffee, but not really. $500 a day is $10,000 monthly, guys. This is where people get sidetracked and just like starry-eyed. Oh, I could use an extra 10 grand a month. No. You should use an extra $250 daily per contract, guys. Don't lose 50 pounds, lose a pound a week over the next year. There's 20 trading days in the average month. If you trade $500 daily, that's net $10,000 monthly, right? Most days will offer the opportunity for more trades. That'll boost your daily average, which will offset bad days. You will have bad days. You'll have days where you feel like you forgot how to trade and you break your rules. You'll have days where you follow them to the letter and you make more money than you ever could have imagined. But then you begin compounding, guys. When your plan is solid, when your consistency is in place, that's where using those prop firms like Apex Trader Funding, guys, you'll have the ability to duplicate your winning account on 20 funded accounts, right? So that $250 a day, let me bring up a calculator because I stink at math, guys. Actually, I'm pretty good at math. I stink at algebra. $250 a day a contract, right? On 2 contracts. That's $500 a day. What if that same day was compounded on 20 different accounts? That's what a lot of our users are doing, guys. They're using Apex and they're trading one set of charts, right? Whether it's on simulator, just one account. But they have 20 accounts that are mirroring that same account. 20 accounts that are doing it, and it looks like this. Let me see if I can find a picture of it. And this is taken from a Nexgen user. If you guys don't have trading questions, we're just going to turn it into achieving goals, right? Guys, this was a Nexgen client. He's trading 20 Apex accounts, making the same trades as one account, benefiting on more contracts, and that's really small. His 120750 on one account applies to 20. Consistency, right? Guys, if you can't do it on one, don't worry about 20. But you turn a $1,000 day into a $20,000 day, right? Just like that picture, Safia. If I'm looking at this account right here, right? Hypothetically, I jump in the market, I get out of the market, I made $60. Trade Copier has that same $60 trade on 20 accounts. That same $60 is now a $1,200 trade. Pretty cool, right? Ron, are you proud of that one? That was one of yours. But that's all it is. It's literally what the name implies. It's a trade copier. It runs in the background. It's linked to your accounts. Yep. Here, let me show you what Melinda's dashboard looks like. I'll just pull the PowerPoint over. So this is Melinda's. This is her live account, Melinda's Live Money, and she has 5 Apex copiers beneath it. So every time she makes $1,000 in her live account, she makes $1,000 in her Apex account. She can trade her Live Money account. The Apex accounts will mirror her account, compounding her money without much out-of-pocket risk. So that's all it is you're taking that one little bite. So Ron's little $200 trades, if he did it with 20 accounts, those become $4,000 trades, right? It's not more trades. Guys, it's just better trades. More advantages. Time tested. But I told my brother yesterday, I don't want to talk about making $10,000 a day with you guys. I want to talk about taking the perfect trade. I want to talk about the process because the process yields results. It's easy to get caught up. The first time I tried to trade the software, guys, and I tried it 15 years ago. And the only thing I could think about was the house I was going to buy and the car I was going to drive. And I forgot to figure on the process, what was going to get me there, right? What gets you to the birdie when you play golf? It isn't wanting the birdie. It's understanding the swing, right? It's the tempo, it's the grip, it's the shot. It's the process that yields results. Guys shooting free throws. It's not wanting the ball to go in that gets it there. It's that straight arm. It's that flick of the wrist. It's lining up. And you could go through those analogies forever, guys. Wanting to be the best engineer in the world isn't going to do a darn thing if you don't learn the process, if you can't do the math, if you don't understand the structural advantages. So this class is designed to get you to the point to where you recognize the advantages. And when you recognize the advantages, you capitalize. Crude oil is a mess, aren't they? That's a 50-50 from a bad bottom. Just saying. What do you guys want to talk about? How's the momentum on crude oil right now, guys? Is it odds favorable or is it anything can happen? What do you think? Anything can happen. Amen, Rob K. So what advantage are we forfeiting? If we choose to take a trade, we don't have the momentum that we want, right? So let's go to the next step. Do we have a clear path? Smalls and large cleared that divergence high. I do have a clear path. So right now I'm batting 500. Do I have an area inside of favorable large triggers? Where's my highest area of support? Is it inside of favorable large triggers, guys? What do you think? No. So I don't have momentum. I don't have an entry area, but I have a clear path. Are my rules met for a high probability trend trade? No. Am I pulling the trigger because I want it to go up? Should I enter the trade because it might go without me? Guys, I don't have the advantages in place. 2 out of 3 isn't good enough for me. This is my money, right? This is my kids' inheritance. This is their college tuition. I have rules in place that provide a statistical advantage. Guys, it may go up from here, but it's not my trade. Because my rules aren't met and because my plan says, in order to take a trade, I need odds favorable, no terminations in an area for it to be a high probability trade. If it's a medium probability trade, I might be willing to sacrifice one if the other 2 are perfect and then manage it assertively. There's no reason to go there if you're not consistently making money yet. Paul from last night. Let's see. You had odds favorable. Everything says down, small breaking below the large. Coming from that bad bottom to resistance, gap theory. Every chart agrees, and you take the entry at the area of resistance inside of favorable large triggers. Got in a little low, but it looks so good, you added onto it. Money, money. You hit that area with momentum. Man, Paul, terminations. 2 divergences, so you take the pivot, stop out at the mid-band, and with this much momentum into a key Fibonacci area, you're able to take it all the way down for the retest. Goldmet, 80 degrees, hitting the beach. I like it. Man, Ron, have a pina colada for me. I can't have those anymore. They make my bones ache. But I sure do love them. Guys, it's 11:43 a.m. Eastern, and Ron hit his goal, and he's going to the beach. Let that be your goal, right? Can't have them any less. Paul, great trading, great advantages. The idea of unfinished business. And then, guys, when you're making money on the easy ones all the way down to support, you can get a little aggressive, right? When you have $1,000 in the bank, you can risk 50 of it to see if they retest that area. But the termination condition held. Great trade, Paul. Nice job. Keep it simple. Keep it focused. 50-50 from a bad bottom. Guys, we've said it 1,000 times. Low probability. 50-50 from a bad bottom, low probability. Everybody say it with me. It's barely 50-50. I wonder if this little circle is going to come into play. Guys, this was at about 11:05 when we drew that. We'll see what happens. David B., let's see what you did, my friend. All right, let's see what's what here. That's a 21.3 and everything says up. That's a 13.2 and everything says up with odds favorable momentum. And that is a nice little stab back to a Fibonacci support inside of favorable large triggers. You take quick money, and then, man, yeah, you could have gotten back into that one. David B., great trading. Letting the 13-2 lead the way, letting the momentum be the strongest, letting the path be the clearest. I like that you got paid. I wish you would have gotten paid again. You probably will next time though, right? Guys, if you see an opportunity that you didn't take, circle it, write it. This was perfect. I should have been in this trade. Is it a good bottom? So Dave, it's a 50-50. Sometimes 50-50s happen, right? The smalls make it through, the large don't. What you're looking at here is these are areas, right? It's not the perfect bottom because the trigger line's broke. So let's say no, it's not. Let's go back to the recipe. By definition, it's not. Sometimes they overrun. That good bottom would have just created more opportunity for you without a doubt. Made you feel even better. But did you need it? Let's see if I can make that bottom go away. With that look right there, with that much strength and that much momentum and everything going through and this much strength and that tight little area, still a great looking trade, isn't it? A good bottom would have just added fuel to the fire. But David, look at that great bottom on your largest chart. If you're going to have that 21.3, doesn't that help? It's the same one. What was absolutely perfect on the 21.3 was a little bit of run over on the 13.2. It's a great trade. Picture perfect, just a shade off. But the message across the board is consistent. That market's going up and it's going up with strength. I think it's a beautiful trade. Paul, you said this one got you. Guys, same one we talked about, right? Rule number 1 not met. Rule number 3 not met. Paul made a choice to take it. Everything set up. The path was clear. Losing momentum once. He took a shot on the mid-band. Smalls are coming down. We're losing even more momentum. And you say that one took you out. Lower divergence. That was worth 4 ticks, wasn't it? Everything says up with a clear path. Everything says up. There's your mid-band. Low risk entry. If you use the areas, Paul, I think you got in a little bit above them. Use those areas, guys. They become bounce points, right? That's 4 ticks. Area would have gotten paid. Yeah, you waited for the signal because it was a lower probability. I like it. That makes sense. So you were in at 99. And your bar quit printing at 73. Flat. Paul, that is either the fastest reaction time in the history or you anticipated a signal. I like that HVA there too, right? That helps. Everything says up, everything says up, everything says up. HVA lines up with a mid-band with every trigger line up and the small still outside. I like it. You did great. 4 ticks. I'd say acceptable risk on a medium probability trade. Second divergence prints. What a great exit, guys. Chart reading for the win. Nice. I like it, Paul. Good thinking. And then there's that same one. So David S., if you're following rules to the letter, sacrificing momentum, sacrificing an area inside of favorable large triggers, right? You definitely would have been rules breaking. But you'll get to a point, everybody, where you learn your rules and you're so intimate with the patterns and you've done the study and the time that you'll learn how to break them. And I'm not advocating breaking rules, but what I'm saying is that you'll know when the advantages are so overwhelming that it's worth taking a shot. But if right now you're not consistently making money, guys, doesn't it make sense to just stick to the rules and take pictures of everything else? Indecision, larger up, smaller down, support to hold, resistance held, larger up, or synthetics are up, larger down, mid band's red. Oh my gosh. All we're doing is waiting for a clear path. All we're doing is waiting for momentum. It'll be fun. Somebody take a picture. If it goes down, John Novak used to amaze me because right about here, right about here, he's like, yeah, everything looks like it's going up, guys. We're not going long. It's a bad bottom. It's a mid-band. It's resistance. Little unfinished business. One of those patterns you're going to recognize is it's probably going to finish the move to the key Fibonacci area. Right about the time I got stopped out of 3 longs, he's saying don't do it. This market's probably going short. Dollars to donuts. John Novak, I know you're listening. He's probably short right there if he didn't already get short because of chart reading. It's not a rules-based high probability trend trade. But when you get so good at chart reading, guys, you're going to begin to recognize advantages. You're going to have 90 days of pictures, 90 days of patterns, expectations, trigger line scenarios. Absolutely it is. That's a key area on the 21-3. But guys, it was 11:03 a.m. when we said that the market was likely to try and make that push to the next level, wasn't it? Look what happened in all of that time. We had this circle down here at 11:03, and it's now 11:52. Prophecy fulfilled. Then you may need to put your synthetics on the 13.2, David. I reset my database. I did everything. Guys, if you don't think patterns are the key to what we do, go back and look at them. Scroll your charts, right? How many times do areas overrun, right? Finish the move. How many times? Creating expectations through pattern recognition, but not trading. Not trading because you think it might. Trading because the indicators say, because your rules say, because your rules are met. That's the key, guys. It's not winning every trade. It's not losing trades that don't fit the rules. That's what creates wealth as a day trader. And I think I do this one every day. And I like to talk about it, guys. This is a little wisdom from the late Mark Douglas. Brilliant guy regarding just the mental side of trading. When you stop expecting to win every trade, you start winning most of your trades because you disconnect from that emotional attachment. You disconnect from that idea that you always have to be correct. When you stop caring about the result, but you care about the execution of the method, right? Think about that for a second. When you care about the execution of the method, what's the method? Paul, I tend to not worry about anything. Version update required by June 23rd, 2023 to avoid service interruption. All NinjaTrader desktop users must update. Looks to me like we have to update by the 23rd. Has anyone done it yet? I haven't done it yet. I've just closed it out because I figure I've still got 16 days. But man, I don't worry. Worrying's for the people without a plan. That's 8, Gary. You can tell by the black background. Dollars to donuts. John Novak and the Nexgen tech crew have already looked at it, thought about it, talked to it, probably upgraded it and looked to see if there was any challenges. And I haven't heard a peep. So I feel pretty comfortable saying. Guys, focus about the execution of the method. Your execution of the method is simple to begin with, isn't it? If I have a checklist with 4 items on it, guys, I have 4 things that I have to think about to get into a trade, right? Let that soak in for a second. If I have a plan, a checklist with 4 items, with 5 items, that's all that I have to worry about going into a trade. That's it. That's it for my entry. I don't have to think about 21-3 charts. I don't have to think about range charts. I don't have to think about month charts. I don't have to worry about whether or not something blew up in Saudi Arabia. All I have to worry about is this simple, focused. And then I have to learn how to manage it. When I add a second trade, guys, now I have to think about 10 things to get into the market. I have to think about not only my high probability trend trade, but I also have to determine if it's a 50-50 trade. And then I have to be able to adjust my brain to the set of rules that apply to the 50-50. Are you guys following me on this? If you're brand new, doesn't it make sense to keep it simple? Doesn't it make sense to spread your attention out over one thing that has been proven to win more than it loses? To shoot for that $250 a day per contract, guys? Keep it simple, embrace simplicity. Take 1,000,000 pictures and keep putting them in the room. Focus on nothing more than being able to enter the market at the perfect spot and then learning how to manage it. Take the stress, take the burden of multiple concepts, of different plans, of different trades off of your plate and allow it to be simple, and you will be absolutely amazed at just how easy your life can be. And guys, that's it for me. It was a great day, great lessons, weak market, right? Tough one. But I think we got some good ones in there. We got to talk about good tops and bottoms, right? We got to talk about entries, recognizing momentum. You got to hear me scream at the top of my lungs again. Keep it simple. For the love of fuzzy, keep it simple, guys. Let it be simple. Stop trying to be so damn smart. Be consistent. I'm going to be back tomorrow morning at 9 a.m. We're going to do it again. We're going to have the exact same talks. We're going to talk about advantages. We're going to talk about entries. We're going to talk about problems. We're going to talk about solutions. We're going to get you where you want to be, guys. If you're not hitting 50, 60, 70% winners, take a step back and simplify. Give me 5 days of simple. And let me know how that works out for you. Philly, welcome to Nexgen. It's great to have you here. Tomorrow, I want you to show up ready to post a picture. I don't care what the picture is, but I want you to get comfortable. And if you need help with that, reach out to your salesperson or remind me first thing in the morning, and we'll cover how to take a picture and post it in Classroom. Guys, have an amazing afternoon. Safia, you're so welcome. Guys, I will see you tomorrow. Be good. Take care.